Good morning, everybody. Good morning. Happy Friday. Happy Christmas Eve, all those things. How's everybody doing today? How do? I do well. Good to see you guys. Hope everybody's doing okay. Last day before Christmas. Guys, I'm not going to lie. I don't know what to expect. Good morning, Lyle. Hey, welcome to the family. I, uh, I noticed you made that commitment. Congratulations, man. Now the fun, right? Now we just get to get good at this stuff. Good morning, Cap. Um, Excited about today. It's market's moving, so hopefully it continues to do so for us. If it thins out too much, no worries, we'll figure it out. But for now, morning, Luciano and JW, and I know Joel's in here, guys. It's Friday. I'm excited. It's a good day. I got my dog behind me. I got you guys in front of me, and we gonna check a little news. Do you guys like the yellow cursor? Is that easier to see? I did that this morning. I was like, oh, I didn't know I could change colors. That's for you guys. Just checking a little news. If you were watching at 8:30, guys, that core PCE made a jump, made it bump, a little bit of a spike, gave it some giddy up behind it. Fancy pants every day. And core durable goods, guys, all these things, yellow, red, orange, these are all news releases that can move the market. And we trade patterns, right? We trade patterns that have been proven to provide a statistical advantage. We don't trade news releases, but one of the advantages that we can give ourselves is to not trade when news is being released, to not put yourself in front of that freight train of emotion. And it's one of those things where that patience pays dividends, because very often I have found myself historically in the best position ever, in such a beautiful trade, whether it's long or short. And then news releases, and I forgot about it, and the market just changes direction, nowhere. And it changes fast, so fast that you typically get slipped. I think my record is $600 of slippage. So I just look and see what's going on. At 10 a.m., guys, we have Merry Christmas, Gary. We have that revised UOM consumer sentiment. It is high impact expected, medium impact new home sales at 10 a.m., guys. This is your cue to write a note and say, hey, don't forget about news at 10. Maybe set an alarm on your phone, whatever you need to do to remember. And usually there's some good citizen in this room that reminds us, hey, news in 5. So every morning I'm going to the news channel, guys. Every morning I'm going to forexfactory.com. Whoops, let me give you the link. Let me share a little bit. In the spirit of giving, there is your calendar, guys. Go check it every morning. Make that a part of your routine, right? Just, I'm getting up, my charts are loading. I'm going to review yesterday's trades, and then I'm going to make sure that there's no news. And then everything that we're going to talk about today is going to come from the education page. Everything that I talked about yesterday came from the education page. Oh, no worries. Everything that I talk about for the next 10 years is going to come from the education page, guys. There are no secrets with Nexgen. I don't want to hold back on you. I want to see you successful. I want to see you happy. I want to see you consistent. So all the answers that you need to be successful with the software are right here in the tutorial section. But the easiest way to be successful, the easiest way to be consistent, is to focus on initially, as you get to familiarize yourself with what we do here, is to focus on the high probability trend trade, guys. And that's what I'm going to focus on for the first hour, is a high probability trend trade. And we're going to talk about this trade because it's a trade that can typically win 70 to 80% of the time when you follow the rules. It's a trade that just breeds confidence through the memory of success. It's a trade that is going to teach you to read your indicators. And guys, becoming a chart reader, that's the goal. The goal is to read your charts. The goal is to look at your indicators and be able to say, man, my indicators are telling me that I, at this point, have a statistical advantage. I'm going to take a trade. And 90% of your days, guys, 90% of your days is going to be spent waiting for that advantage to transpire. 10% of your day is going to be getting into that trade, getting out of that trade, managing that trade, not letting those advantages go to waste. So I spend my first hour talking about that high probability trend trade so you can gauge advantages. And what you're going to be able to do with a little bit of study, with a little bit of understanding, is you're going to be able to look at your charts and you're going to understand three really key concepts. You're going to understand where the market is likely to continue. For the high probability trend trade, guys, this is just that point where the trend that's already established is likely to pick back up and go in the direction of the trend. These are going to be your entries for the high probability trend trade. You're also going to work your way into understanding where the market is likely to go. The more time you spend with the Fibonacci on these charts, the more time you spend understanding momentum, the easier it becomes to put in intelligent targets off in the distance and not short side yourself. Because you'll look at your chart, you're like, oh my gosh, it should go hit this fib. And that becomes your profit target. And then you'll understand where the market is likely to stop. And where it's likely to stop is important on two levels. The first level is these likely to stop areas. We call them termination conditions because they can terminate a trend. They can literally stop it cold. Like you can be screaming one direction and you hit one of these key areas and the next thing you know, it's going the other direction. Well, you guys are going to know where these areas are. You're going to understand how to gauge that and you're going to be able to keep yourself safe by not trading into those areas. And those likely to stop areas also behave as an anchor. And there's a section here called the first 30 days and beyond, consistent winning trades, guys. That's the high probability trend trade. But it's the high probability trend trade that sets up after one of these termination conditions reverses the market. So the high probability trend trade is nothing but advantages. It's literally three advantages that create a trade. When those three advantages happen after one of those likely to stop areas, man, the market goes gangbusters. That's your best chance of success. And that's exactly what you should be looking for. So I spend my first hour talking about three rules. And I talk about three rules because these three rules create three advantages. And these three advantages are the recipe for a trade, guys. And if you begin to speak to yourself in terms of advantages when you look at your chart, this is my chart. What direction is it going? Do I have the advantage of momentum because of strong triggers? If I do, well, then I'm going to look to make sure that I haven't reached one of those likely to stop areas to give me the advantage of a clear path. And if that happens, I'm going to go pinpoint where the market is most likely to continue. And I'm going to take the best of the best entry. And this accumulation of these three advantages created through three rules, that is my recipe for a trade, guys. That's what's going to get me to pull the trigger. And until I have the three, I'm really just going to sit on my hands and I'm going to wait. I'm going to wait for the people that move the market to provide them. I can't force them. And these three rules happen on only two charts. Can you use more charts? Absolutely. Are there other charts available? Absolutely. But in the beginning, when you're trying to learn how to read your indicators, it's so much easier to really keep it simple. It's so much easier to keep it focused. So I have this clever little phrase that says, let the large chart lead the way. I want to put it on coffee mugs. Let the large chart lead the way, guys. Your large chart is what the people in charge of the market want to see happen. Your large chart is the equivalent of the large crowd. These are the people with the money, guys. These are the people that create trends, that establish momentum, that react to those likely to stop areas. And your large chart is going to define direction. You're going to understand which direction you should be trading with the most current bar, just one bar over here on your large chart. You're going to understand the momentum of the market, whether or not it's advantageous, whether or not that first rule is in effect on one bar. And you're also going to know whether or not you have a clear path, whether you've reached an area that can create a bounce, or whether or not that market has gone beyond any areas that may be problematic and maybe hasn't reached an area that becomes a target where the market is likely to go. All of this happens on your large chart, guys, and all of this happens on only one bar. One bar, hey, good morning, Dwight. And then this one bar gets dissected. It gets broken down into about 15 to 30 bars when your rules are met. because you're going to turn your attention to a small chart. If the large chart is a broad stroke of a brush, it is this very, very wide spectrum giving you the overall feeling. Well, then your entry chart, your small chart, is going to take that broad stroke and it's going to refine it all the way down to the point where the market is likely to continue. By doing so, by using the smaller, faster chart, it's going to allow you to reduce your risk dramatically. It's also going to allow you to increase your profit potential exponentially. And your third rule is the one that happens on the small chart. It gets you into the market where the market is most likely to continue. So only 2 charts, guys. Only 3 rules. And then we're going to get into the day, and we're going to learn the trigger line and the Fibonacci rules for when it's okay to trade. We're going to talk about that high probability trend trade, a trade where each indicator on every chart agrees for the trade. You guys simulate, get in there, pull the trigger. Don't be afraid to make mistakes as a brand new user, guys. Don't be afraid to be wrong, because being wrong is what puts you on the path to being right. Making mistakes is what puts you on the path to not making mistakes. Being willing to put yourself out there, to be able to practice, to try, and realize that you're brand new, and be okay with being new. Be a student. Simulate a lot. But the idea is that we want you to have the correct rules. We want you to trade with advantages. And that's where posting your trades in class is huge. Because every time you take a trade, you're going to put it in the room. And every time you put it in the room, you and I are going to have a one-on-one discussion. We're going to talk about literally these 3 advantages. We're going to talk about whether or not you had momentum and whether or not you had a clear path. And we are going to talk about your entries very much. And you're going to be able to put all this information in the room, and you're going to be able to grow from it each and every time. So don't hold back on posting in the room. Don't hide things from me. Because rules provide a statistical advantage. So the goal is to have this long-term victory, right? Where something that I'm doing is always, it's predictable, it's repeatable, it is proven, rather than trading on hope and fear. And then we're going to simplify heavily, guys. I'm going to spend the first hour really just talking about high probability trend trades, because high probability trend trades are your foundation. High probability trend trades, guys, that's where the magic happens. That's where you become a chart reader. That's where you gauge advantages. That's where all the good stuff that you're going to do as a trader for the rest of your life is going to stem from. But that high probability trend trade, your ability to read charts, is going to take you to what we call a medium probability trend trade. And just off the bat, the name suggests, well, that it's probably not going to win as much as the high probability trend trade, right? It's medium. And most of your indicators are going to line up for a trade, which means that of those 3 advantages, you're going to have maybe 2 out of 3. Tater Bear, when you say pull up your old trades on NinjaTrader to be able to see them visually on the charts, or to create like a synopsis of everything that you've done in a certain time range, just so that I can get you in the right direction. Okay, so on your charts, let's do that real quick. If you right click on any chart, you're going to have a data series option. From that data series option, click on it and scroll all the way to the bottom. Whether it is NinjaTrader 7 or 8, it doesn't matter. You're going to see your last option is plot executions. If you have text and marker, what it'll do is it'll show every entry, every exit. So you can do that on your small chart. You can also do it on your large chart. And what that does for you, if I get into the market and I get out of the market, you see it right here, entry, target, everything. You'll see on the left side of the bar, your entry. On the right side of the bar, you'll see your exit. And notice that it doesn't show up over here on my large chart. If I right click and go to data series and I make it plot over here as well, then I can see exactly what I'm doing on both the large and the small. No worries. So there's one more option. If you don't want to see the typing on there, And I'm a big fan of seeing my entry and exit prices because it helps me do the math on what I'm doing. But you can also, and this is your clutter reducer, do just the markers. Go markers only, click apply, okay. And what you'll see is your entry on the left side, your exit on the right side. You'll see where you bought, where you sold, but it keeps that text off of the chart for you. So just make it comfortable for you. And that's one of the cool things is they're your charts, right? There's no right or wrong way to have them. Some people love a chart that's squished up, drives me nuts. Some people love a chart that's stretched out. I can't read it. And then some people, and I don't know why, they leave like 17 feet of gray, right? There's no wrong way. There is no right way. It's just got to be your way. So do it and keep asking questions. If you have any questions about how to do stuff, just ask. And then medium probability trades, guys. Most of your indicators are going to line up for a trade. However, there's going to be an issue. Your ability to read your charts is going to identify that issue. You're going to know whether you're missing momentum, a clear path, or an entry area. And ultimately, guys, this is probably going to be the vast majority of your trades. Good morning, Jose. And when you're executing medium probability trades, you're going to take them, but you will manage them assertively. Your ability to read your charts, to understand change on a smaller, faster chart is going to let you get in, to understand where the problem is going to allow you to take profits at these key areas. And you'll be able to get to a zero loss level ASAP because you know that it's not high probability. You know that there's a challenge in the place. And when you take the time to understand these advantages, you also get to understand when those advantages are gone and what that means to you. So without the advantage of momentum, I know that the market may not push in the direction of the trend so much. So it puts me in a mindset, let me make sure that I can manage the trade. And the same with the other two. So we're going to simplify. We're going to start with that high probability. So a 50-50, Andy, is going to be what we call a medium probability. I don't even talk about anything that's minimum probability because, good Lord, who wants that in their trading plan, right? I mean, nobody would ever write a plan that goes, this trade absolutely sucks and loses more than it wins, so why don't we focus on it, right? Never. Yeah, but medium probability for sure. And the 50-50 trade, and we'll talk about it, that's the one where the clear path isn't there. You're totally good, man. Andy, I get comfortable with people really fast. So once you and I have talked a little bit in the room, I'll start playing a little bit. I hope that's okay. But that 50-50, the clear path is gone. It's a medium probability trade, which means that we rely on our momentum in our entry areas to keep us focused on the management side of things. So we're going to talk about the two trades. We're going to talk about the high probability. We're going to introduce that medium probability, the 50-50 that Andy's talking about. You guys have to figure out what looks you're going to commit to, right? You've got to learn them so that they become easy. That's the only thing Nexgen can't give you guys. You've already got the greatest software out there, right? You've got the greatest teacher in the world. Just ask me. Just kidding. But the only thing that I can't give you is experience. The only thing that I can't give you is repetition. So that's on you. That's where the simulation comes in. That's where taking a lot of pictures and posting them in the room comes in. And every time you post in the room, this is more of a cry for help than it is instructional. Tell me what you did. Every time you post in the room, tell me what you did. Tell me why you did it. And there are no wrong answers, especially for you newer people, because sometimes you're going to take a trade just because things are green. Tell me that. And then we'll go back to talking about advantages. Sometimes you'll take a trade because you had a feeling that the market might reverse. Tell me that. And then we'll talk about the advantages that are present. Show me where you entered. So Tater Bear, that was perfect that you asked that question because you can show me exactly where you got into the market. And there's a good chance that we can work together to find a better entry, to find a more efficient entry, to find a lower risk entry, or maybe to find a higher probability, higher profit entry. Or sometimes we'll just virtually high five because you're so damn smart. And then show me where you got out. Because management's the second half of what we do, guys. And every great entry, and you guys are learning great entries right now, every great entry creates a manageable situation, which means that ultimately you may start taking small profits. But as you learn to read your indicators, you're going to realize that holding for bigger moves makes sense. So take a lot of pictures. Oh, I appreciate that, Dwight. Take a lot of pictures and then use the spreadsheet. Nexgen gave you a spreadsheet when you downloaded. You'll find it in the Nexgen Study Picks folder. And there's an Excel version. There is an open document version. And I'm also just going to give you my version. But the spreadsheet is one of the most underutilized tools that Nexgen provides, I think. Your first page on the spreadsheet is nothing more than a trade journal. Here's a picture of what I did. Here's how it made me feel. These were the conditions. And here's the feedback I received on it. There's a whole notes section that encourages you to post in the room and carry that feedback over. Your second page is your favorite looks. What's it going to take to get you in the market? So, Scott, as you're brand new, you're going to start seeing these high probability trend trades. So I want you taking pictures of them and saying, man, this is the absolute best of the best trade for me, whether it's high probability or not. What is your trade? This one's labeled kickassery. What does that mean? That means that with odds favorable momentum and absolutely nothing in the way, we're going to nail an entry, right? This is what it should take to get me into the market short. So that's page 2. That's where you're going to put your stuff. And then over here on the client trades, guys, this is where I've stolen your pictures. When you guys put greatness in the room, I've stolen about 275 of them. I've dropped them in the room or dropped them into my spreadsheet so that I can always go back and I can study. Like, what did Joel's high probability trend trade short look like? Well, it looked exactly like that other one that we looked at, right? So this is the best of the best for Joel. The other one will be the best of the best for you. Boy, that's a private file, Ron. That's right there, right behind the folder that says taxes 1987 that I don't want anybody looking in. But guys, you're going to build this up, and the more you look at these pictures, the more you annotate these pictures, the more you study what other people are doing, the easier it becomes for you to know exactly what you're looking at. And if you look at it when the market isn't moving, you start looking at these still pictures, it makes it easier to see it when it's actually happening live. Awesome, Tater. I love that you're looking for setups. So when you post that room, tell me why. What about the NASDAQ has you looking for a setup? What are you looking for to get in the market? Where are you going to get in? Where are you going to get out? Give me this information, and then I don't have to do this and go, Tater, what the hell are you thinking, brother? Because I'm just not sure, right? So let me know what you're thinking, man. Let me know what you see that says, I'm looking for a setup. And what you'll find, dude, take your time. And then Tater, just so you know, and everybody else, my first hour is spent on rules. My first hour is spent talking about this. The second and third hour, where I'm going to click on your charts and we're going to go back to the advantages that we just learned. So don't think I'm ignoring you. What I really come into that second hour, and that's where we apply the lessons, where we look at your charts, where we talk about what you're doing. If you have to leave early for some reason, let me know. I will definitely skip ahead. I'll make sure everybody gets the feedback they need. But what I do is I go through these. We talk about the rules. You guys simulate. Post in the room while I'm doing it. And then we'll come back and we'll look at everybody's charts and see what was going on. And then, guys, that first page of your spreadsheet, I want to give you the how-to. Put your trades in there. Put how you felt. Ask yourself every morning, go back and look at it and say what worked and what didn't work. What felt easy? What kept you relaxed? What made you nervous? This little historical study each morning, guys, it's going to prepare you for the day. It's going to set you up thinking about the things that were good yesterday. It's going to set you up thinking about the things that weren't good yesterday. And you're going to start to recognize these patterns in the market that are bringing you success or maybe taking it from you. And then the second half of that is when you post it in the room, is I'm going to start recognizing patterns in you. And for you guys that are still kind of new, everybody has a thing. Some of you are going to break rule number 2. Most of you are gonna break rule number 2 as much as you can. I know that I did. I get excited to get in the trade. It's cool. But when you do, when you have a thing, I'm going to start to recognize your thing. Some of you are going to get in early. Some of you are going to get out early. Some of you are going to fight the trend or fight momentum, and we'll begin to recognize this together. And you and I are going to walk hand in hand, and we're going to make sure that you understand how to get the best of the best out of your trading. So, with that said, your path to becoming a confident trader, post in the room, use that spreadsheet, and let's talk about rules, guys. Everything starts on the large chart. Large chart leads the way. Large chart defines areas, trend, and momentum. And the first thing that it's going to do for us is it's going to define the momentum in the market. That's rule number 1. Rule number 1 says that I have to have strong triggers. And the only way that I can have strong triggers is to understand which direction the market's going. So if the background is green on my large chart, the market's going up. And if the market's going up, guys, I'm only looking for rules to be met for high probability trend trades long. I'm going to keep myself going with the large crowd, the people that move the market. If the background is red on my large chart, then I'm only looking for trend trade short. I'm only looking to go with the trend, going with the flow. If you've ever been in a lazy river at the water park, it's so much easier to just float with it rather than to fight it. And that's kind of what the color of the background does. It just gets you focused on the right direction. And I want you to see how easy this is, guys. Easiest lesson ever. You ready? Whoops. This is the NASDAQ. Is the NASDAQ trading up or down? Should we be looking for longs or shorts? We're using that most current bar, and we're using that background color. We're just looking for longs, right? But that's just the first part. We have to make sure that we have momentum. And then Tater Bear, you're about to learn something. We also have to have a clear path. So even though we're looking for longs, it doesn't mean that the rules are met for longs. And that's a very key part to what we do. On the S&P, we're looking for longs as well. The background is green. And on crude oil, we're looking for shorts because the background is red. And again, it doesn't mean that there's shorts to be had because I can tell with a quick glance that my rules aren't met. But at least it's going to keep me from trying to fight that overall trend. And I talk about the colors because the only way that you can have strong triggers on a large chart, the absolute only way it can ever happen is if your trigger lines agree with the background. So your small triggers, those solid lines, those are a fast-moving momentum indicator. And your large triggers, it's large moving average, it's a slower moving momentum indicator. These two are going to work together, and they have to be green if the background is green, and they have to be red if the background is red. And if these don't match, rule number 1's not met, ladies and gentlemen. Strong triggers means that your small triggers have broken above the large triggers, and there is space created between the two. It's like scissors that are opening, and when the scissors open, guys, you can cut. And when you can cut, I mean, you're getting work done, right? So we're going to look for those open scissors, and those open scissors are going to let me know that I have strong triggers. And strong triggers means that the odds are favorable for the market to continue in the direction of the trend. Odds favorable momentum, guys. That is your first advantage. In a downtrend, smalls below the large, larger wide. This is so key, guys. Let those large triggers be wide, opened up in the direction of the trend. The space between the two, those scissors open, lets me know that the odds are favorable for the market to continue down. I've got odds favorable momentum. And when I have it, this is the most advantageous look for me to buy Fibonacci support on that smaller, faster chart or to sell Fibonacci resistance on that smaller, faster chart. On your large chart, you'll see that pullback. You'll see that retracement on a small chart. It's just going to look like a tail or a wick. You're not going to see a ton of movement in that bar, which is why we let it lead the way. The refinement process that we use to pinpoint entries, you will pinpoint exactly where the bottom of that tail is most likely to form for a long trade, or exactly where that bottom or the top of the tail is most likely to form for a short trade. This becomes your entry for the highest probability trend trade. So going back to the live market, the background is red. My large triggers are green. My small triggers are green. It's impossible for me to have odds favorable momentum right now, guys. I do not have the advantage of momentum. Rule number 1 isn't met. There's absolutely nothing for me to do. My small triggers are above the large triggers. They're beginning to create space. I do have odds favorable momentum on the NASDAQ. And then my smalls are beginning to return a little bit, but they're still outside of the large triggers. Momentum is on my side here on the S&P. Is everybody good with the idea of momentum, guys? Strong triggers leads the way. Strong triggers lets me know that the odds are favorable for the market to continue. Well, if the scissors open, sometimes they close. And when scissors close, you can't cut. You can't get work done. When your small triggers work their way inside of the large triggers, you've weakened the large triggers. When you weaken the large triggers, anything can happen up or down. It becomes a crapshoot. The advantage of momentum is not there. And you're going to see these weak triggers preceding reversals very often in the market. You're going to see weak triggers into areas. And it's going to let you know that, well, that area, it's got a better chance of holding. Strong triggers break areas. Strong triggers hide mistakes because there's so much pushing behind them. When they're weak, you're going to see a market that has the potential to reverse, that has the potential to slow down. You do not, Tater Bear. That's going to be rule number 3. That's a great question. What you're going to be able to do using that smaller, faster chart is know exactly where that tail is likely to form. And that's why we use the smaller chart, because if we waited for all of that to happen, the market's gone at that point. We're going to pinpoint it. We are about 8 minutes out from that entry lesson, and we'll do it a couple times for you. But what you're going to find, let's see if this is a good example for us, is that tail on the large chart. Do you see how it's bouncing directly off of an area right at triggers on the small chart? That's your bottom of your tail. We're going to talk about that. That's rule number 3. And this is also going to become an awesome study lesson for you. But we can't put the horse before the cart, so to speak, right? Is everybody good with rule number 1? The advantage of momentum, the best of the best. Rule number 1 fixes mistakes. Rule number 1 breaks areas. Rule number 1 gives you the opportunity to have a market that's likely to push in the direction of the trend. Rule number 1 slows down, gives me those anything can happen triggers, and I'll be darned, there's a reversal, even without the benefit of Fibonacci on this chart. From the reversal, we get odds favorable momentum. There's your tail, Tater. You're going to be able to pinpoint right where that's likely to happen so that you can ride that momentum up to the upside right until those triggers weaken and it reverses again, giving you momentum and another tail. Egads and little fishes. There was about a 3-hour gap in between those tails. That's okay. It was the middle of the night, but sometimes we just have to be patient. We have to wait. And then sometimes nothing agrees. Sometimes the large don't agree with the small, and the small don't agree with the large, and the small and the large don't agree with the background. This is a fight. This is where buyers and sellers are trying to figure out who's going to win. This is where buyers and sellers are pushing one another, and neither can establish the momentum that they want to go in the direction. This is a transition period. This is where most people are tempted to predict what the market's going to do, guys. This is where a lot of people get beat up in these areas. They're like, oh, the background's green, it has to go up, and then they get stopped out. They're like, wait a minute, my triggers are red, it has to go down, and they get stopped out, right? Guys, this is where opinions are formed, and opinions rarely pay the bills in this business. And I love to tell the old saying, my father-in-law used to tell me, wish in one hand, poop in the other. Let me know which one fills up first. Of course, he didn't say poop. He was a rough and tumble kind of guy. But if you learn to avoid these areas where the fights are happening, eventually somebody wins, and you get that odds favorable momentum. So rule number 1, it's just designed to keep you on the right side of things. And if I take all of the indicators off of this chart, this is the S&P, and we just look at the trigger lines for a second, odds favorable, there's a tail, and the market pushes up. Odds favorable, there's a tail, the market pushes up. We now have weak triggers. I no longer have the advantage of momentum. This is my first bar telling me what's going on. And you'll see throughout it, weak triggers, there's your reversal. Strong triggers, it pushes down, probably an area there. Strong triggers, it pushes up right to the weak triggers, and there's your reversal. Weak triggers gives you a deeper push. I'd be willing to bet $20 there is a mid band right here because I recognize the pattern. All I trade is patterns. But odds favorable got me all the way up to that trouble spot. And then once you learn to gauge momentum, well, then you start to recognize the areas that may stop the market. Then we start going to rule number 2. And rule number 2 says don't trade into those likely to stop areas, even with odds favorable momentum. Make sure that there's room to your profit targets. And let's see. Oh, look at that. There's your mid band, and it's got a lot of support. You're going to recognize and be able to talk about when that trend may end, when that big bounce may come. And you're going to use that momentum indicator right along with these key Fibonacci areas, guys. And this is rule number 2. Rule number 2 says do not trade into an area likely to stop the market. Do not trade into a termination condition. And a termination condition can be a couple different looks. And you know what? Let me get you the visual. I don't know about you guys. I'm pretty big into the visual side of things. These are areas that may stop the market. These are the areas on the large chart that we look for that may create a bounce, that may set off a fight between buyers and sellers, or may just reverse the market completely. We're going to look for red Fibonacci resistance, blue Fibonacci support, yellow 1-to-1s. We're going to look at divergence high lines, and we're going to look at divergence low lines. Guys, each and every one of these spots is a place where decisions are potentially made. Decisions are made at these areas by these guys, the huge crowd that we want to be a part of, not by the little crowd that fights everything. This guy moves the market, guys. This guy makes decisions at areas. This guy creates momentum. We're remoras. We let him make his decisions. We stay out of the way, and then we find a way to take advantage of the decisions that he's made. So rule number 2 is going to have us identifying where these decision points are. And it happens with a simple recipe. Everything begins with price reaching the area, whether it is support, resistance, 1-to-1s, divergence highs, divergence lows. Price must get there. That's what sets off the decision-making process. So here, price reaches Fibonacci support. When it does, the only thing that you have to ask yourself, where are my triggers? If my triggers are above support, don't trade into it. Don't take that short trade. Don't hope that it breaks. Don't wish that it breaks. Don't want for it to break. Simply sit on your hands and say to yourself, hey, a reaction's probably going to happen here. I don't want to get caught in the middle of it, so I'll do absolutely nothing. I'll either wait for it to break, at which point I will have a clear path, or I'll wait for it to reverse, at which point I'll look for a trade in the other direction. But when price reaches an area and the triggers remain above support, no more short trades. Look at the bounce that came off of that, guys. This is the idea when the path is not clear. Price reaches a divergence low. Over here, price creates the divergence low. This cyan line doesn't print till like the 3rd bar up. But when price comes back and reaches it, now the decision making is set off. Where are your trigger lines? They're all above. Therefore, none of you are going short, even with a red background, even with red triggers. You're saying to yourself, this is an area that may stop the market. Decisions are about to be made. Let me sidestep. Let me get out of the way. And sure enough, this termination condition reverses the market, sets it off in the other direction, guys. This is what we call a pivot stop out of a prior divergence. Divergence means that the market lost momentum. You see it visually with the cyan line, which means that the buyers stole momentum from the sellers. When the sellers revisit that line, the buyers are going to make a choice. They're either going to let them break through it, or the buyers are like, yeah, no, we already stole it once. This is where we're going up. You guys don't have to get caught up in that decision-making process. And if a termination condition creates a full reversal, now it's a strong bottom. The strong bottom is the precursor for the highest probability trade long that you can take. Those pivot stop outs are powerful, and even more powerful when they happen at resistance. And we're going to do a little picture taken here. 90% of your day is spent reading indicators, and I want you to see this. Price reaches resistance, triggers remain below, do nothing. Price bounces all the way off. Thank goodness you didn't go long. It hits support. The triggers are a mile above. Don't go short. It doesn't mean go long. It means, hey, let's stay safe. Let's wait for advantages. Eventually, it reaches resistance, divergence high, another resistance. All of your trigger lines remain below. Guys, this is your 90%. This is a pretty good visual of the market getting caught between areas, a fight between buyers and sellers. They're trying to figure out who's going to win. Eventually, this termination condition created the reversal, gave us odds favorable momentum, and we had not reached that next area. There's your tail in between the areas with the momentum, with the clear path. Guys, this is your 10%. This is where you guys are going to get paid. This is where all of your patience pays off. This is where that high probability trend trade happens, and you statistically have a 70 to 80% chance of winning that trade. And you knew, because you came from a termination, because you had momentum, and because you hadn't reached an area yet, decision process wasn't in place, that this was your best chance of success. So if price reaching an area and none of the triggers breaking says don't go, sit on your hands, when is the area broken? Great question. Let me answer that for you. An area is considered broken when your small triggers and your large triggers get to the other side. So in this case, your small and your large get to the other side of support. Support is now behaving as resistance. The area is broken. You'll notice that there's odds favorable momentum, and price has not reached Fibonacci support yet. Guys, this is your high probability trend trade. This is that trade that sets you up for success with a clear path, with odds favorable momentum. And as a brand new user, you can keep it very simple. You can keep it very focused, and you can let it be very black and white. Either price reaches an area and no triggers break, and I'm just going to sit on my hands and do nothing for a minute. It's hard to do nothing, guys. It's the hardest thing to do as a day trader. Or small and large break through the area. Now I'm going to look for my rules to be met. And once they break through, check it out. Odds favorable momentum. They broke through. The path is clear. And there's your tail, Tater. You're going to be pinpointing that entry to ride that wave of momentum to the upside. So this is the most basic point. Is everybody okay with this? If price reaches the area and none of the triggers break, sit on your hands and do nothing. Here's a picture of them happening at lows. Price reaches Fibonacci support. It reaches 1-to-1s. It reaches a divergence low. All the triggers remain above. Don't do anything. Each one of these ended up reversing the market. At a high, it looks exactly the same. The recipe never changes. Price reaches the line. Decisions are made. You have the ability to see where these decisions are made. If the triggers remain below, just do nothing. It's easier. It's safer. It's going to keep you on the right side of things, guys. And then we've got one more look. One more look. If an area can be broken or an area can hold, there's going to be, remember, strong triggers break things. Sometimes we can recognize the potential to break. And this is that 50-50 trade that Andy was talking about. 50% of your trigger lines have broken through the area. Your small triggers are going to lead. They're going to break through. Guys, they should smash through the area. Don't let them just peek their head. Don't let them like a turtle coming out of the water, right? They should smash with reckless abandon, with odds favorable momentum. And with this odds favorable momentum and that smashing of the small triggers, the large triggers lag behind. They're a slower moving indicator. But this 69.80 area, it has the potential to break. That's the way to do it, Dwight. It has the potential to break. It could break, it might not break. I don't know. With all this momentum, the potential is there. But because it's not broken, it's not a clear path, which means that the recipe for a high probability trend trade is not met, which puts this look into the medium probability category. Remember, we said that that's going to be when an issue exists. Your issue is the path isn't clear. So you're going to be so good with advantages that you're going to not forfeit momentum, that you're not going to forfeit the best of the best entry. And you'll be able to capitalize on these likely to break areas, these potential to break areas. But even the picture to the left shows you, just because the potential is there, it doesn't create a guarantee. I'm going to give you a plan for that 50-50 trade, 50% above, 50% below, to get the most out of this look, guys. And then, when I'm in a good mood, the sound effects come out. One more of those pictures, and I wanted to talk about, the clear path before I took this picture. Guys, let's talk about the 90%. Odds favorable momentum. Beautiful. Everything is railing, right? And look how it smashes through Fibonacci support. All that momentum crushes that blue line. But then it reaches yellow 1-to-1s, and none of the triggers are capable of breaking, and you guys didn't go short. You said to yourself, all my triggers are above. Let me sit on my hands. Let me wait for a minute. Didn't take that short trade. Didn't get stopped out. The buyers pushed back right into Fibonacci resistance. It used to be support, but all the triggers got below, and all the triggers remain below. So rule number 2 says don't go long yet, even from a good bottom. Wait for the rules to be met. And guys, here's the fight. Sellers come off resistance, and the triggers don't match. There's nothing to do. The buyers push it back up, and it's still a termination, and there's nothing to do. And then the sellers push back down, and my triggers don't match. They're not through the area. There's nothing to do. My small triggers break the area, but my larger down here, there's still nothing to do. But ultimately, what happens is while you guys are sitting on your hands on this 90%, your buddies are calling you. They're like, man, I wish I had Nexgen. I wish I had those great rules. I just took 3 longs and 2 shorts, and now my account's blown out, and my wife's mad at me, and my dog bit me. And you guys said, it can be so easy, Bob. Wait for odds favorable momentum. Wait for that path to clear. Let me talk to you about the 10%. You're going to knock on the door and say, have you heard about the rules? Because, guys, when everything clears out, when this fight's done, you get odds favorable. You get a clear path. There's that tail once again. You guys just pinpointed it, and that's your highest probability trend trade. And with all that momentum, it's straight to the payday at that red line more often than not, guys. This is what we're talking about. This is what we're looking for. Odds favorable momentum, a little bit of patience, keeping you on the right side of things. So everybody's cool, right? Termination conditions. Guys, they ruin a party. Let's see if we can find some parties being ruined. Weak triggers at a divergence high. Large triggers never break. All the way to support. Not a trigger goes through. All the way to resistance. No triggers through there. Right back to support. Egads, look at it, guys. The market consolidated right between 2 key areas, and not one of you took a trade. Not one of you hoped, wished, or wanted. You simply waited, and you said, hey, let's see what happens. Now I have odds favorable momentum. These areas have the potential to break, but it's not broken yet. Let me make sure that I'm not sacrificing anything on a smaller, faster chart. And in this case, I'm sacrificing momentum. I can see it with divergence. I'm not willing to hope this area breaks, because not only do I not have a clear path, but now this divergence means there's a loss of momentum. I'm giving up 2 of the 3 advantages, and I want you to see how it just railed to the downside, guys. I'm going to give you a plan to help keep you safe, just the way we did that. I get so excited about it. All right, guys. So there's going to be one other termination condition that I want to talk to. If everybody's good with using lines on the large chart, using fibs, mid bands, yellow 1-to-1s, using divergence highs and lows on the large chart, then I'm going to talk about one more termination condition before we get to entries, guys. And this is a small chart termination condition. This is the only small chart termination condition. I couldn't care less about the lines on a small chart unless I'm getting into a trade. So I'm going to use a small chart to help me identify when the large chart is changing, but I can't see it because it's such a slow chart. And we're going to do that with those divergences, with those 3 losses of momentum in the same price range. Each time a cyan line prints from a low, it means that the buyers have stolen momentum from the sellers, whether it's the large chart or the small chart. We're going to use it on the small chart. 1, 2, 3 cyan lines may terminate a trend. The only termination condition I give any credit on a small chart. 1, 2, 3 losses of momentum from a high may terminate the trend. Guys, you're going to keep your eyes on this, and if you're looking at what you think is the perfect trade, but there's 3 divergences, it's going to allow you to sit on your hands and not take it, right? And then it gets even more powerful. Look at where those small triggers are inside of the large triggers. That's a weakening of the large triggers. That's an anything can happen look. So not only is there visually 3 losses of momentum, but there's also a loss of momentum in the trigger lines. They work their way inside of the large. Guys, you're just throwing away the advantage of momentum, and it becomes even more powerful still when that third pivot is higher than the previous from a low or lower than the previous from a high. It's that head and shoulders pattern. I'm not a patterns trader. I never even knew about this one until I learned about 3 divergences. But it's pretty powerful. It gives you an indication that it may push. So you're going to use this look at a low or this look at a high, and it's going to help you see that change on a large chart that isn't registering because it's such a slow chart. You may have a clear path and weak triggers, and 3 divergences says don't try that short. Don't give up all that momentum. You may have odds favorable momentum, a clear path. And 3 divergences on a smaller, faster chart help you see that it's probably not pushing any further, that you need to sit on your hands and wait for the next best opportunity. These 3 divergences, as you work your way into medium probability trades, are going to help you manage as well. They're going to help you not forfeit momentum on those 50-50 trades. They're also going to help you even if you do take the perfect entry right at the top of the tail. You're short and the world is great. 3 divergences give you the opportunity to manage out of a trade. They give you the opportunity to keep the powder dry. You don't have to sit and just hope that that market continues. Your small chart will give you the information. Guys, this is such an important chart read, and you're going to take a little bit to get it. But it's going to pay huge dividends when you start understanding these things. So 3 divergences in the small chart may terminate the trend, but the large chart leads the way. We're looking for areas on the large chart. We're looking for lines on the large chart. And then once we have it, like once we have strong triggers, you guys have the advantage of momentum. Once you have nothing between you and your target, you've got no termination conditions, we're going to refine, guys. We're going to go to the smaller chart. Remember, the smaller chart is what the small crowd wants to have happen. Those yahoos that fight all the momentum and the trend and the direction, right? And they're going to create this little push, this little retracement counter to the underlying trend. Guys, this is a fight, and this is a fool's fight because it fights everything that these guys want to have happen. We love the small crowd because they're going to get you to where the market is most likely to continue. And rule number 3 is going to allow you to use a limit order, to wait for the market to come to you. And you're going to use that limit order, and it's going to be sitting in an area. Fibs, mid-bands, yellow 1-to-1s. And really the key to the success on this one is that those areas are nestled inside of what we call favorable large triggers. And favorable large triggers mean, I have a picture. Favorable large triggers mean that your large triggers, which are just the large, slow-moving average on that small chart, and your synthetic triggers, which are nothing more than the large triggers from your large chart, they should be overlapping. They should be wide in the direction of the trend. They should be one on top of the other like snakes riding piggyback. And when you have this look, this favorable large trigger, you're going to find the areas within. So the tighter the triggers are on top of each other, the smaller the window of opportunity, the smaller the bounce point, the smaller the point where the market is most likely to continue. For you, that means the least amount of risk possible. And the more these spread out, the more potential bounce points there are, the larger the risk becomes. So favorable large triggers for the brand new user, guys, this is a huge way to keep your risk on the minimum. And with all those advantages, you're going to see just how amazing it is to pinpoint. So when the large chart leads the way, we're going to do a short trade today. We did long trades yesterday. And this is in the spreadsheet that I dropped in the room. When the large chart says go, the large chart has strong triggers. The large chart has a clear path. Notice it's just one bar, guys. That's all it is. Everything is strong, everything is down, and I have not reached my area of support. I'm going to wait for the small crowd to do their thing, guys. I've made the decision that it's time to look for an entry, but I'm not just going to jump in. The market goes up and down. These triggers are moving averages, and moving averages love to correct. So I'm going to wait for the small crowd. And the small crowd's going to give me a reversal bar. They're going to say, hey, we're pushing. We know the trend's down, but we want it to go up. We know the momentum is down, but we really want to fight it. It makes us feel like big guys. And the reversal bar happens, and you're just going to look for those triggers. You're going to look for those large triggers, those synthetic triggers, and I want you to mentally draw a box around them from the highest line of the triggers to the lowest line of the triggers. So remember that the tighter they are, the smaller that box becomes. And this isn't where the market is most likely to continue, guys. This is where we're looking for areas. And areas create a bounce. So once you've found your triggers, for the short trades, you're going to look from your lowest point of resistance to your highest point of resistance. And resistance can be red Fibonacci resistance, magenta midbands, or yellow 1-to-1s. And your window is from the closest resistance to the furthest resistance inside of favorable large triggers, from your lowest resistance to your highest resistance inside of favorable large triggers. And you're not going to pay attention to this nonsense outside of those favorable large triggers. They're beyond the correction point. We don't want to get into a trade there. So you've created what we call the window of opportunity, guys. You've created this window where the market is most likely to bounce. You have the advantage of momentum, right? You have all of these things in place. So you're just going to activate a limit order right at the bottom of that window because the large chart is screaming to the downside. The large chart has absolutely nothing to bounce off of, and you're pinpointing exactly where the market should continue if it's going to continue. So you're going to put a limit order at the lowest point of support or resistance, and pray, if that's your thing, right? Hope that the small crowd is capable of pushing against the large crowd. If they get to your limit order, you're in a short trade. But you're not just in a short trade. You're in a short trade with odds favorable momentum in your favor. You are in a short trade with absolutely nothing between you and your target. And you're in a short trade having entered where the market is most likely to continue, guys. You have completed the trifecta of advantages, and you're in a high probability trend trade. This is a trade that repeats itself every market, every day, guys. And then Tater Bear, odds favorable in a clear path. If I circle the tail on the large chart, those rules for entry on the small chart. Guys, look how it comes right back to support, right inside of favorable large triggers. This is my window of opportunity. This is where the market is most likely to continue. If I wait for the tail is long gone. The tails are going to be used for study. The tails are going to be a way for us to go back and look at these things historically and start taking pictures and start developing trust in the methodology. And if you go to the market, this looks freaking exactly like the manual. If I circle the tail at 940, pulls right back to support. The trade you're looking for played out differently. Do you suppose it had anything to do with the trigger lines not through the areas yet? Rule number 2, not being met. I wonder if that had something to do with the bounce. There's resistance, no triggers. Look at the bounce it creates. Isn't that amazing that you knew exactly where that was likely to happen? Isn't it amazing that you had a rule based around momentum? Right? Now, what you're going to find, Tater Bear, and let me show you a pretty good example of this. Even when the market is crazy volatile, let me see if I can find one of those big 8:30 news releases, because it's going to floor you when you see this. Let me go back. Hopefully I have an example of one. Even during the most volatile times. That was nothing today. I don't think we've had a lot of news this week. I'm going to go find one for you. Because even during the absolute most volatile times, what you'll find is that the pattern's still kind of Where's one of those big news days? You'll know a big news day because it's crazy, crazy, crazy from 8:30, and you'll get this huge push. Let's see what that one looked like. 8:30 there, odds favorable tail. In 10 minutes, the market dropped 70, 80 points, and it came from a termination, and it had odds favorable. And this may have been too fast to trade, but what you'll find is that even during the absolute craziest, most volatile times, the market tends to still hold true to the patterns that we teach, because the people that are trading it, even the giant institutions, they have these areas already in line. Like they already know where they're going to sell. They already know where they're going to buy. They already know long before it ever happens where they're going to do something. So when the sellers steal momentum from the buyers and the buyers try to push up and the triggers can't break, you guys know not to go long because you have the visual of where things are changing. When price pulls all the way back to support and all the triggers are above it, you know not to go short because that's the most likely point for a bounce. And then when you do have odds favorable and everything is going up, you know exactly where the market's likely to continue, because what happens is what used to be resistance suddenly becomes support. And when it falls inside of those triggers, life gets good. So we've got news coming up. Let's leave the NASDAQ up and see if that news has a big impact. But Tater Bear, it's absolutely amazing. I love opening volatility because the patterns still follow themselves most of the time at the opening. But news, we'll see what happens with news. Currently, I have odds favorable momentum, but I have no trigger lines through support. Let's see who wins off the news release. I have absolutely no idea. But what I do know is that when these three are present, life is good. And I do know that if I circle the tails here and it lines up with an area inside of favorable large triggers, life is good. It gives me a statistical advantage. And then while news sorts itself out, let me show you guys a little something about entries. Pretty common new user fears, if you will. There's only 8 ticks to get to that trouble spot, right? There's only 8 ticks to get to that divergence high. And a lot of people say, Mark, there's no way I'd ever take a trade with that short little run, right? But remember that we trade pullbacks. The top of that bar is the reversal bar that gets you back to your best area. So your entry is actually coming from the 86 area, which means that you actually have like 30 ticks to get to that target. So using the smaller, faster chart as a refinement process actually reduce risk because you don't have to sit through the pullback, and it really increases the potential, profit potential, which is pretty cool. And sure enough, termination condition, there's your news release, there's your odds favorable momentum, and look how the market goes. Yeah, and Tater Bear, there are. And there's times where some asshole with $20 million in his account just buys a bunch, right? And it changes things and it creates volatility then too. And I think that that's one of the most amazing things about what we do here is no matter when it is, no matter what the news is, no matter what's going on, there's these patterns that are consistently recognizable, right? Odds favorable momentum into support and none of the triggers are broken yet. I know that this is a key area, and look at what it's done in the past, and this is pretty neat. It created a big bounce here, and it also created a bounce for continuation here. So these are just reflections of fear and greed. No matter what the volatility is, no matter who's in control or what's going on, I've got a rule in place that says no matter what, if price reaches this and my trigger lines don't break, it's okay to sit on my hands and do nothing. Because I know that this is a key area where decisions have the potential to be made. And because of that, I'm not willing to take a short trade. Does that make sense, Tater? I think you're absolutely right. There are times when the opening creates a huge fight in between buyers and sellers. It creates a huge fight when people try to take, oh, let me get it right off the open. Let me see if I can sneak in and get my trade done. But the reality is your indicators and your areas are going to let you know who's in control. They're going to let you know where the decisions are being made. And the cool thing is we have the simplest little group of rules that are designed to keep you from trying this short and just being okay, saying that maybe not yet, right? And you can see the fight almost to the tick and look at the reaction off of it. That alone is worth its weight in gold. To have that much momentum, and you guys knew exactly where the guys with money were going to push up. How's that for a real world example of why rules are designed to keep you safe? And then the flip side of that is if the buyers do take over, I have a pretty good idea where they're going to try to get. But I don't get that far ahead of myself. I live in the moment because currently I'm at Fibonacci resistance and all of my triggers are below. And who knows, they may rattle around here like Pac-Man for a while. I have absolutely no idea. So everything goes back to rules. Everything goes back to advantages. And the cool thing is no matter how much momentum is there was absolutely no reason to take that short trade. Without momentum into this termination condition, there was no reason to try a long trade here. So that's that 90%, right? That's that 90% keeping yourself safe so that you can really capitalize when those advantages are present. And let's see, I don't know, we'll see what happens. But let me give you some gifts, especially for my new people. And it's Christmas, right? Ho, ho, ho. Trend trade checklist, ladies and gentlemen. The trend trade checklist is designed to help the new user stay focused on the advantages. And it's designed to help you alleviate the idea of opinion. Because what it does is it reminds you what the best of the best looks like. It reminds you that when the market is coming from a good top or bottom, it creates a huge advantage. And guys, here's a video of my brother talking for 45 minutes about good tops and bottoms. If you're brand new, take a little time over the holiday and watch this. Grab an eggnog, put the dog in your lap, and enjoy it. This will do wonders to help you. Just understanding when areas have the potential to break, when they've broken, and all that good stuff. I love that video. I've probably watched it 50 times. If you don't have a good top or bottom, you can still take a trade. You can still use advantage of momentum, a clear path, and an entry area, but you're going to use those divergences. You're going to use that small chart divergence to help you manage out if things decide to change. It reminds you that odds favorable momentum on both charts creates the biggest advantage, that no terminations is the best of the best. And that area inside of favorable large triggers. Guys, I want you to get to the point not only where you print this out and police yourself before you get into a trade, making sure that you have the advantages, but when you're annotating charts, in the beginning, you're going to throw some guesswork out there. Well, I think it was up and the path might have been clear and I'm not sure. What you can do is you can start writing these rules on the chart. And what it does is it creates this visual. What does it look like to have my rules met? And it associates it with the actual rules. So you begin to speak to yourself in terms of advantages. I have odds favorable momentum. Let me type it onto my chart. I have a clear path. Let me type it on my chart. And then what it does is when you present a picture, if for some reason you told me that you had a clear path, but you didn't, it opens the door for the lesson. It allows us to go back to look at a couple pictures to really discuss the recipe for a clear path. It'll help facilitate the learning process very much. Same thing with momentum. And I think that writing inside of favorable large triggers pays huge dividends for the new user because it helps eliminate that fear of missing out just a little bit. So I've never had anybody use this checklist and do worse than 70%. Honestly, I don't think I've ever had anyone use this checklist and do worse than 85, but I like to say 70. You know what, Tater Bear? You are so in my head. Let me give you a couple checklists, and then our next conversation is about how to manage it. But I like to talk about those great entries first, because great entries create the management. And Tater Bear, I gotta tell you, first, I like saying your name very much. Tater Bear is fun to say. Keep asking. Don't stop asking. Oh my gosh, you are doing everything that the people that find success are doing right now. Don't lose that. Some people think that they're asking too many questions. It's impossible. It is impossible. So keep doing what you're doing. But great entries set the tone. Great entries create manageable trades. Great entries great entries make it easier to find profits. They make it where you can manage your risk first. So I'm going to give you guys another checklist. This is for the new people. As you learn to associate pictures with the words, this helps. Is the market coming from a good top or bottom? Watch the video. But there's that termination that creates a full reversal. That's a good bottom. There's your odds favorable momentum, exactly what it looks like, exactly what it means. And then, of course, because we speak in terms of advantages, there's the disadvantage. There's the weak triggers. Anything can happen up or down. You're going to begin to associate these advantages with it. Termination conditions. Not broken, totally broken, has the potential to break. When you know what you're up against, you know how you have to manage the trade. And then there's your windows of opportunities, guys. And it starts, reversal bar starts the pullback. Limit order goes at the bottom of the window. These are outside of the window. Don't jack with it, right? Showing you exactly what you need. So there is 2 checklists, one to print out and put on your desk, to take those words and write them on your chart every time you take a trade. And you'll get to the point where you stop asking, hey, Mark, was this a trade? You'll start showing off, hey, Mark, look at this rules met trade. So use these checklists, guys. Give yourself that checklist every day. And then we get into the KISS trading plan, guys. This is the best thing that I can give you guys as a new user. And this is only a stepping stone. This is not the end of the road, because remember, we're learning to read our indicators right now. So this is a stepping stone in your learning journey. It's designed to optimize your success with the high probability trend trade, giving you the absolute best of the best entry. And it's designed to optimize your chances of success with the 50-50 trade. That trade where one area hasn't broken yet, but it has the potential. This KISS plan is just the beginning, guys. This is getting you to where you can read your indicators, keeping you focused on a mechanical entry, an entry that gives you a statistical advantage. And you're going to spend your first 20 days just working on the entry, guys, taking pictures of beautiful entries, posting them in the room. Mark, I think this was an entry. I circled a tail. There was an area inside of favorable large triggers. Am I doing this right? I'm writing my rules on the chart, Mark. And I just want a little feedback. I just want to make sure that I'm seeing this the way that I need to see it, guys. Get in the habit of that. And then once you're in, you've got to do something with that amazing entry. So, Tater Bear, here we go, brother. And I put the disclaimer below the management word too. You will craft a plan tailored to your personal goals, guys. You will craft a plan tailored to your personal goals based on your ability to read the charts. That comes through simulation, through study, through class feedback, and continuous practice. So the same mechanical approach to getting in, the same advantage-laden approach to getting in, that methodical approach to getting in, you can incorporate into your management as you learn to read your indicators. And everything revolves around the great entry. Everything revolves around getting in at the point where the market is most likely to continue. This is why I encourage you guys to go back and circle tails. Why I encourage you guys to look at 270 pictures of entries coming from areas inside of favorable large triggers. Because once you nail the entry, guys, everything else gets pretty easy. Your initial stop goes where the market should not. And this is the one part that I didn't talk about this morning. So let me draw a picture on it. Here's my entry. My reversal bar My window of opportunity extends from the highest point of resistance to the lowest point of resistance, and you can see that my entry is right at the bottom of that window. If I know where the market is most likely to continue, well, then I also know where it shouldn't go. 4 to 5 ticks beyond that window of opportunity is where I typically leave my stops. In a perfect world, it's beyond the trigger lines, because the trigger lines are corrections, right? They're moving averages. There's a correction there. But typically 4 to 5 ticks beyond the window of opportunity. This is where my stop goes. I know where the market should continue. If it doesn't continue there, I'm going to have a protective stop. I'm going to manage my risk before I ever manage my profits. Anything that wins 70 to 80% of the time, guys, is mathematically obligated to lose 20 to 30% of the time. Anything that provides a statistical advantage, and 80% of the time you're good, 20% of the time there's going to be a cost of business, guys. We minimize our losses through great stop placement where the market shouldn't go. And once you get in here and your stop's in place, there's absolutely nothing to do. We're keeping this very, very if-then. But if you don't get stopped out and the market gives you a reversal bar in the direction of the trade, in the direction of the momentum, in the direction of the trend, in the direction of the clear path, well, that's an awesome opportunity to reduce your risk. Go a couple ticks above it. Because if the market does all that work in the direction of everything that's advantageous, if it starts going the other direction, we're just going to take a small loss. And that's okay. Small losses are a normal part of a positive equity curve. But with all of that momentum and all of that clear path, it's pretty easy to get to the first target, guys. And on this KISS plan, your first target is a very small target. It's $100. It's $100 for a couple reasons. Not because $100 is the way to getting rich in a day, guys. Day trading isn't a way to get rich in the day. $100, when you hit that, you feel good. Your palms dry out. Your heart stops racing. You just got paid. You feel the euphoria of success, guys, and that begins to create confidence. And that confidence reminds you that the whole reason you got into the trade, where is it? Is because everything was screaming on the large chart. Everything was doing exactly what it needed to do on the large chart, and that's why you entered on the small chart. So when you reach that $100, it really validates the effectiveness of those advantages. It gets you paid, which makes you feel good, and you're going to move your stop to break even. And this is a very arbitrary stop. It's not the best stop, and it's a stop that's gonna get hit a lot. Not gonna lie to you, but that's okay because it's break even, and there is absolutely zero risk on this trade, and you've been paid. And what it does is it gives you the confidence to stay in that trade to the second target. It gives you the confidence to believe in the large chart, to believe in the momentum. One of the most common things in management is new users get caught up in these fluctuations on the small chart. So this very methodical plan is designed to keep you from focusing on the small fluctuations and simply say, I either get hit break even or it goes to my second target. And my second target is only $200 as a brand new user, which means that with all of that momentum, with all of that clear path, with the absolute best entry, I just made $300. I believed wholeheartedly in the strength of the large chart. I believed wholeheartedly in the clear path of the large chart. I believed 100% in the ability of the small chart to provide me with the most advantageous point for entry. And I just made $300, and I don't care what happens next. And I'm going to tell you guys right now that think that every trade has to be a home run or a grand slam. $300 a day is a $1,500 week, guys. It's a $6,000 month, and it's a $72,000 year based off of one trade that goes right. Or it's a $72,000 year based off of 3 trades that could only hit the first target and stop out break even. Guys, you don't have to be in the trades for the home runs every time. Sometimes it's okay. Just get paid, get out, wait for the next set. But what's going to happen is great entries are going to create those manageable trades. And every time you post your trade in the room with that $300 winner, Well, we can have a conversation about it. I can say, Tater Bear, the momentum was insanely good. The path was awesome. There was nothing in the way. You took like a sniper's entry. And I see that you got out at the blue line on the small chart. And you're going to say something like, man, I saw that divergence line and I was afraid to hold on. I didn't want to lose, right? And we're going to say, Tater Bear, check it out. This momentum and this clear path, this is the best of the best, man. This is when it makes sense to start holding for that next area, to hold for that next fib. When you have odds favorable momentum, when you have a clear path, when it's the highest probability trade, the only thing, good morning, Sophia, the only thing on God's green earth that's going to get me out of that trade is if 3 divergences print in the same price range. That's what's going to get me out of the trade. Not my fear of loss, not my fear that it may fluctuate or bounce. When I have this look, they're going to have to come get me. I'm going to hold for the big one. 3 divergences on the small chart. Absolutely, Tater Bear. So when you're in and everything is perfect, everything is awesome, everything is absolutely amazing, it's not a medium probability, it's high probability. The only thing that's going to spoil my party is 3 divergences on the small chart. That's it. And it takes a lot of the pressure off, and it really keeps you focused on the advantages of the large chart. So the KISS plan is designed to keep you guys focused on the best of the best initially. And I'm going to tell you guys right now, we have clients that in their first 30 days with Nexgen funded accounts in those prop firms by really focusing on the KISS plan. The KISS plan is a great way for people when you get a little sidetracked, when you start trying to trade your opinions more than what the indicators are saying. The KISS plan is a great way to kind of reel you back in and keep you focused on the best of the best. In this KISS plan, let me show you something pretty amazing. If I take all of the educational fluff off of the KISS plan, and I take off the second trade, your focus for your first 20 days is less than 1/3 of a piece of paper, guys. And it can be that simple initially. Let it be that simple initially. And then once you're good at this, once you're great at establishing the identification of momentum, and once you're comfortable identifying the clear path or the potential to break, and you get really good at getting in at the right area, well, then you're going to add in the 50-50 trade, that trade where an area hasn't broken, but it has the potential. And you're going to be able to recognize the momentum on the 13.2. You're going to see the small triggers on the 5.1. And you're going to say, man, the momentum is insane, even though the path isn't broken or isn't clear. And then your plan for the second trade is going to say, but if divergence prints, well, now you're giving up momentum. Maybe don't take the trade as a brand new user. It's going to remind you that a termination that creates a full reversal optimizes your chances of success. And using this checklist the same way you used it for the high probability is going to put you in the 50-50 with the absolute best chance of success. It's not a 70 to 80% trade. It's okay. I had someone mad once, like, Mark, I'm only winning 50% of the time, 55% of the time. I said, well, 90% of your trades are medium probability trades. How big did you want your win percentage to be? He goes, well, it needs to be in the 90s. I'm like, well, then you got to stop trading into areas that haven't broken yet. And of course, he didn't like the answer. And then we established some realistic expectations. But this will optimize your chances of success, guys. And then I even gave you management for the 50-50. And notice that it says no divergence on the 5-1. Don't give up momentum. If divergence is there, don't trade. If divergence prints, exit the trade. When you know what the challenge is, when you know what advantage isn't present, it allows you to put your management hat on. It allows you to say, well, I don't have a clear path. I have to manage assertively. My momentum isn't the best. I have to manage assertively. I didn't have a very good entry area, which means that the things really aren't as good as they could be. I'm going to need to manage assertively. And that's what kind of allows you through your chart reading to get the most out of these trades as you move forward. So I think I put the KISS plan in there. I did. I put the KISS plan in there. And then through your study, guys, you're going to create your own plan. I've also got a template to help you do that. It's just the KISS plan without words. So you're going to define your entry. You're going to see trades in here that are based around momentum. Define it. Take pictures of longs and shorts. What's the criteria to get in? And if you share your plan with me, Scott, Mike, Tater, Andy, if you tell me what you're looking for, this is, Mark, hold me accountable. I will. I definitely will. To the point to where it's going to aggravate you a little bit. Just ask Safia. Safia, stop trading in determination conditions. Safia is one of the biggest success stories going on right now. And I tease her because I love her. But I'm going to recognize your patterns. I'm going to recognize what's going on. And once you share your plan with me, I'm going to help hold you accountable to it, guys. And we're going to do this every day, 15 hours a week live, every day. And we're going to focus on understanding advantages. And guys, there you go. From termination to termination to termination to termination to termination. Who's getting beat up in the NASDAQ right now? And who's being patient, waiting for a statistical advantage? Because you sure as heck don't have it. There's a whole lot of nothing to do in that market. The S&P had weak triggers. 1, 2, 3, 4 divergences. But it's straight into support. And all of my triggers are a mile above, guys. I can't go long. I don't have the direction. I don't have the momentum. I can't go short. But earlier, I probably made some money. So I have to be patient, right? 90% of my day is just waiting. And once you get good at being patient, life is pretty outstanding. Overrun of the area, pulls all the way back to support with that momentum and goes right to the key area. And that is where the sellers take over, right at that decision-making point. You traded into the term, Safia? That's okay. And guys, here's the deal, is you guys have never lost a trade and had it cost me money, ever. It just doesn't happen. My bills are still paid. My kids still get Christmas, right? But I want your kids to get Christmas. So show me the trade. Show me your losers. And Safia and I had this deal. When she was really deep into the learning process, she promised me. She said, I'm going to show you everything, the good and the bad. And I think we did an awesome job working together, recognizing patterns. And she's weeded out the bad in most cases. So much that she knows. She understands. She creates these patterns where she says, you know what? Because of what's going on, because of the room to the problems, absolutely I'll take that trade. And she's very comfortable with it, right? Guys, this is a beautiful trade. It's not a high probability trend trade. But I want you to see this. She knew where the trouble spot was, and that's exactly where she took profits. She knew exactly where the trouble spot was above, and she let everything subside and momentum subside. And when she had this little gap between the two, she just ran it and took profits right out of the market. It's beautiful. It's an awesome chart read. It's not a high probability trend trade. Safia, I love this trade, and I love your ability to catch it. But if brand new Safia took that trade that was losing more than she was winning, then we'd have talks about termination conditions and how maybe you just got a little bit lucky because there wasn't the advantages to support it. So, and then as I get to know you guys, I focus on praise. You'll realize that a lot. I focus, yeah, we did. I focus on celebrating victories. I focus on identifying advantages. And when there's a mistake on a chart, when there's a problem on the chart, it's never a negative. It's always an opportunity to learn. So I'm going to take a break. I'm going to stretch my legs. And when I come back, we're going to start looking at all the charts that you guys posted. We're going to start talking about what you see, what's going on. We're going to talk about whether rules were met or rules weren't met. And we're just going to do that. We're going to look at the live market, and we're going to smile lots because smiling is my favorite. Absolutely, Gary. Gary, why don't you do me a favor? While I'm taking a break, take a picture of one of your trades and show me where your stops typically are, and we'll just do a quick little refinement. I'd love to. I think that'd be great. But I'll also do that. That'll be the first thing we talk about. We'll talk about stop placement when I get back. And I will see you guys in about 5 minutes. So go stretch your legs, guys. Back in a minute. Man, not everything I say. You guys are awesome, though. So remember, Tater Bear, write it on the chart. Because what happens, let me show you guys what I do when I look at pictures, is I have to scroll all the way to the top. So if I click on a picture and there's a dissertation underneath it, I may miss it. I may miss your reasoning, and I may miss out on why you did what you did. So there's a couple reasons that I ask you guys to do this. Yeah, and I'm not trying to beat a dead horse, and this isn't just for you, Tater. But annotation does a couple things. It's great for me, right? It's great for letting me know why you did what you did. But it's even more important that you know why you did what you did, right? Because what happens is you guys take these brilliant freaking trades, and I go back to momentum, clear path, in an entry area, and I sound like an ass. Dude, I can't for the life of me figure out why you took this trade, right? And then you go, but Mark, this is what I saw. This was such an advantage, and this is where it was coming from, and this was my low risk entry, and I knew exactly where I was getting out. And then I'm blown away, and it stops giving me indigestion, and it inspires me to start trying to do what you do, right? So embrace this one for sure. And then, guys, I'm going to scroll up to the top right now, and I'm going to start looking at the pictures that were posted. And it looks like today Joel got us going. And Joel said that he had strong triggers, and it wasn't a clear path because it was a 50-50. So Joel knows exactly what he's getting into when he gets into this trade, if he gets into this trade. And he's like, well, my smalls aren't outside the large on the 13. That's a no. And now I have divergence on the small chart, and that's a no. And you are coming from a good bottom. You are coming from a termination that just absolutely rocked it. But this was enough to keep Joel out of the trade because it isn't the absolute best of the best. And guys, these pictures are outstanding. When you take pictures of your rules not being met, and you can realize that it's not the best, it begins to not only reinforce the advantages, but it really keeps you focused on following your rules. Same thing here. None of the triggers are through. Joel says, I'm going to wait for it to break. I'm not going to hope that it breaks. I don't have favorable large triggers. I don't have a clear path. I'll just sit on my hands and do nothing because life is easier that way. And then another 50-50 divergence. He says, oh man, I broke my rules. Dag nabbit. And it happens, man. You're going to break your rules, right? Is there anyone that doesn't break their rules at some point? And he's just saying, well, I got in. Well, divergence had printed. From where you're at, divergence had definitely printed. And this is what's pretty cool. Rules not met. Let me get out of that trade. My advantages aren't there. I don't trade on hope or wishes or wants. I need to make sure that I have a statistical advantage, and that's the way to do it. All right, guys, if you will excuse me for just 1 second, I think my dog needs to go potty. Let me go let her out real quick. Be right back. I'm so sorry. So new. I have that little panic feeling. Joel, great job recognizing, that's not what I wanted. That's not the best of best. Let me get out. Even if it's a couple ticks lost, it's better than sitting and hoping and waiting. Well, as that trade where the advantages are gone, should I wait for them to hit my big stop loss, or should I just cut my losses and say, man, the advantage wasn't there? So great job. Whoop. Dead link. 50-50. Divergence. And I know that's an old picture. Good stuff, right? Good look. Nice one. Let's see what's next. And then Tater Bear. This is where you started posting, right? I like it. Coming in, not a clear path yet. I'm not sure what the blues are. You clearly have experience in the market. You clearly understand these patterns, and you're looking at it going, well, this is a pretty common one. That's a pretty common one. Let's see what happens. And I like it. And then there's the same picture. And you were looking for it to break resistance and let resistance behave as support. Or you're looking for it to break support and behave as resistance. And I think that that's absolutely brilliant. That is the 100% correct look. One of the easy ways to get it done, right? One of the easiest ways. Let the area break and let it pull back to it. So Tater Bear, I'd say you're already off to a pretty good start. And then JW, odds favorable momentum. Everything says down. Entered on the pullback inside of favorable large triggers, but JW not in an area inside of favorable large triggers, right? Does that make sense? So let's talk about this one. I'd love to. Oh, and Gary, don't let me forget, we're going to talk stop placement. Man, guys, I get distracted sometimes. So let's go through large sharp first. JW, odds favorable. You said it right there. I agree. That's a great look. The one part that you omitted, though, is, did I have a clear path? Because when you understand whether or not the path is clear, JW, it gives you the opportunity to get your mind in the right spot. Is this something that I'm going to let run until 3 divergences take me out, or is this something that I need to be a little more focused on the management side? And I want you to see large triggers haven't broken, right? Which means that, yes, you do have odds favorable momentum, but the path isn't clear yet. And then we kind of compound that path not being clear is you're not coming from a termination condition. You're coming from a pivot where all the triggers cleared the areas, which means that it's not a good top. It's not a strong top. It's just a pivot that pushed down. And what you'll find if you're sticking to the KISS plan, and I hope that you are, and I think that you are, but if you're sticking to the KISS plan, from a good top or bottom is one of the best ways to help assure success. Because what that means, when a termination creates a full reversal, guys, it means that the decision was made right at a key area to push you, to push the market in the other direction. So when you're not coming from a good top or bottom, especially on that medium probability trade, you want to be a little more aware of what's happening on the small chart. And you get in, and let's make your window of opportunity. From the highest point of the triggers to the lowest point of the triggers, this is where I'm looking for areas. Are you with me, JW? This is where I'm looking for areas, right? So I've got resistance all the way up here. And the mid-band's pretty close. It's about a tick or two below, right? So we're not entering at the pullback to the triggers. We're entering on the pullback to the area inside of the triggers. And that's such a key part because it gives you a ricochet spot. It gives you a point for the market to bounce. And notice how it went right past that mid-band into the triggers. Oh, awesome, Gary. Cool. So it blows right past the 1-to-1s, not inside of favorable. It blows right past the mid-band, not inside of favorable. And it turns from within the triggers a little bit. And then when it comes down, it gives you another pivot. And this is the key to what's going on in your trade right now. This pivot has divergence. So when I go back to the KISS plan, and I talk about a medium probability trade where that area hasn't broken yet, now I have, watch this, we'll just transpose this right onto your chart. Get up there. So now, when I start looking at it, did I have odds favorable on the 13-2? Absolutely I did. That's a huge advantage. I love it. My small triggers are outside of the large triggers. on the small. I love it. But here we start getting into challenges. There's my divergence. I have to mark no. Am I coming from a good top or bottom? I have to mark no. So I'm really, JW, at this point, using the KISS plan, I'm 50-50 on advantages. I've got half the advantages in place. I've got odds favorable, but I'm not coming from a great top. And I'm not 100% strong momentum. And it even says below, divergence, no trade. And I think that this is one of the hardest things because we start seeing these downtrends. We start seeing this momentum. And in our head, almost instantly, and let me know if you guys feel the same way, we stop looking for the clear path when we have the momentum because we know that momentum breaks areas, right? But momentum breaks areas when it's momentum everywhere. And these divergences not coming from the decision, JW, this is a trend. This is a trade killer, or at least a giant red flag. And after it prints, your window of opportunity gets much smaller. But that's a lot of risk on a maybe trade. Does that make sense? Awesome. Great read, right? And it's just once you figure out what kind of trade you're getting into, it gives you the opportunity to look for some of the challenges when it's not 100% perfect. So awesome job, JW. Thank you for posting that. And what you guys are going to find is that when you post trades, trades that work, trades that don't work, it doesn't really matter. There's always a lesson in there. There's always something. Even perfect trades have lessons in there. And then Tater Bear, the trade you were looking for the break. Yep, I get it. And what are you annotating with? I saw you ask in the room. What software? When you downloaded software, Tater Bear? Oops. If you go to the, no worries. If you go to TechSmith or go to your search bar and type in TechSmith, this downloads on your computer when you put all the indicators. It's just a free version that comes from TechSmith. It's the same people that make Snagit. So it should already be on your computer. I'm trying to get mine to pop up here. There it is. And it's a real simple tool. It just comes up with this giant red button. But what that does for you, and I'll show you exactly how to use it. Hopefully this is helpful. Is if you hit that capture button and left click, and drag down so you can do large chart, small chart. It'll ask you once you release the mouse if you want to capture that image. And when you do, it's going to give you this preview. And this is obviously what's going to go into the room. But it gives you the shapes up here. They're all click and drag, left click and drag. So you can put squares around anything that you want to talk about. You can draw arrows to anything that you want to talk about or things that were important in your trade. And then you can use the call out button, left click and drag to the downside. And then there's our opportunity to have a conversation. Snagit and TechSmith Capture are super easy. Snagit is the bells and whistles version. It's about I think it's $63, probably lifetime license. And then once you put all the stuff on there, all you have to do is click the copy button, come over to the chat box, and Control V if it's the pop out, or just click and paste. I think that's an easier way to do it. And then the cool thing is once you upload it, you can click upload on it and it'll give you a link. It'll put your picture in the cloud. And if you copy that link, you can go to your spreadsheet. And if you took that high probability trend trade or that trade that's one of your favorite looks, you can drop it right into your spreadsheet. You now have this link that takes you right back to the picture so you can study it tomorrow. So if you need any help with that, let me know. Usually most people get it in a couple tries. It takes a few. But in the software user guide, there's actually a link as well. Let me find that for you. The screen capture program and how to share in class. Cool little tutorial for using Capture. If you want, I'll drop that in the room. And let's see where we're at. Getting through the pictures pretty quick. Market's bouncing off of fibs today, guys. It happens. Jeremy P. Jeremy P says, and I love this. Check it out. Bad top. Didn't make the key area. Pulls all the way to support. Nothing blinks. Jeremy says, man, this market with all that momentum and not coming from a turn, it's likely to go find that fib. So he lets his small, fast trigger, boom, bang. Perfect execution, guys. This is a continuation trade. This is a continuation of an established trend when the large chart leads the way. But your small chart gives you those three divergences, that nonsense that kind of kills its forward momentum. You wait for the momentum to come back in your triggers. And guys, this is not a high probability trend trade, but this is absolutely flawless execution on getting into an already established trend and taking advantage of it. Great job, Jeremy. Jeremy's one of those people in the room too. It's been a lot of fun watching his trades come around, watching his plan come together. Good stuff. All right, Gary, you ready? Let's talk stop placement. This is such a great lesson. I love it. All right. And of course, everything starts, right? Odds favorable. I remember this picture. Odds favorable, clear path. Everything says down. Life is good. Reversal bar. One divergence doesn't scare us because, let's be honest, this is the best look ever, right? That's about as sexy as it gets on a large chart. So at the time of the reversal bar, Gary, we established from the top line of the triggers to the bottom line of the triggers, right? And this is where you're looking for areas. And guys, this is such a key part for the initial stop, is I want you to use the phrase, I want you to say, this is the area where the market is most likely to continue. And Gary, you see how it's just one line, right? That's it. And you nailed your entry. I mean, freaking rock star entry. I could teach a class on your entry. So if this is where the market is most likely to continue, and let's make it green, right? The color of money. This is where the market's most likely to continue. That was probably a bad choice. So remember that these work together, Gary. Your large triggers and your synthetic triggers, they work together. So when I'm looking for a window of opportunity, I have to look from the highest line in the synthetic triggers or the large. They could be reversed, right? But from the highest line of the two to the lowest line of the two, regardless of whether it's synthetic or large. Does that make sense? From the highest line of the two to the lowest line of the two, whether it's synthetic or large. And then my window of opportunity goes from the areas within, whether it is fibs, yellow 1-to-1s, or a midband. And in this case, you have the amazing advantage of understanding that the place where the market is most likely to continue, the one line inside of those trigger lines is just a midband, and that's it. That's your whole window of opportunity. So the expectation is that the market will go down. The expectation is that this momentum and this clear path, the market's best chance for success, your best chance of success, is if it pulls back to this midband inside of favorable large triggers and then continues down in the direction of the trend, in the direction of the momentum. Does that make sense? Identifying where to get in is the first step in identifying where the market shouldn't go. So I know that the midband is my best of the best spot for continuation. And the reality is sometimes things overrun, right? We get a little above, whatever. So I'm going to take a protective stop, Gary, and I'm going to go like 5 ticks. So at 42, so right here at 47. Because let's be honest, if the market gets above my best of the best spot, if the market gets above my correction in the triggers, if the market gets above all of this, do I really want to be in the trade? it's shown me that it's not going to do what the expectation is, that the patterns have shown us over and over that it's going to do. So if the market, that's it, 4 to 5 ticks above the highest spot. So let me take a couple different pictures. And what we'll do is we'll go through that window of opportunity on a couple different pictures. Here the line, this is your window of opportunity, right? And about 5 or 6 ticks above puts you just outside of the large triggers. So if the market comes all the way up here, well, fortunately this one gave a reversal bar and you probably made money. But if it just straight lined through and got up here, I don't want to be in it anymore. My advantages are gone. My lowest point of support inside of favorable large triggers are these 1-to-1s. So my stop is going to go about 5 ticks below them. And you're going to say, but market's above support. Yeah, but the support isn't in my bounce zone. So I'll take my lowest point of support and go about 5 ticks below. Or I'll take my highest point of resistance and I'll go about 5 ticks above. Why not the synthetic trigger line? Why not? What about it? Why is that not the window? Great question. It is. But the question, Gary, and let's go back to rule number 3. And this is why I think writing rules down is so important. I'm going to write it in the chat box here. Rule number 3 says buy or sell a pullback at an area inside of favorable large triggers. So it doesn't say buy a pullback to favorable large triggers. It says buy an area inside of favorable large triggers. So the mid band is inside of those favorable large triggers. The 1-to-1s are inside of the favorable large triggers, right? It's like go sit in your car. Well, you're not going to sit on the hood because that's not inside of the car. Go into your living room. Well, you're not going to stand in the kitchen because that's not inside the living room. So these areas inside of the favorable large triggers, what they do is they behave like a brick wall, right? They behave as a point to bounce. So the favorable large triggers themselves offer up a correction in price. Price is going up, and as it pulls away from these favorable large triggers, it wants to return. It just does. It's like this animal magnetism. Well, when it returns, we want something for price to bounce off of. That's where these lines come into play. That's where these Fibonacci lines, where these mid bands, where these yellow 1-to-1s really come into play. What they do is they say, I get it, price, you're going to correct to those triggers, but I want a bounce point. I want a launching point. I want something for price to ricochet off. I want something that was created through the emotions in the market for the market to bounce off of. And that's why it's so imperative that we're trading from lines and not just triggers, because what happens is, and it's the same idea right here, and there's a termination condition. And of course, this isn't going to show the best example because it's railing down. But if I expect price to correct to the trigger, for entering into the pullback to the large triggers, I don't, Tater. And that question's been asked 100 times. And what happens, and let me show you how this happens a lot for people, is the small chart is very much a tiny little time frame, a fluctuation. And I've seen people try to anticipate it, and they get, no, you're great, dude. And they get this little reversal bar, and they go long, right? But they go long against momentum. They go long against the trend. They go long against everything, trying to catch that little snippet to their short, that 7, 8, 9 ticks to their short, and then more often than not, they get run over. So they try to anticipate that a reversal bar is going to print, and then they get run over, and they keep doing it all the way down. And by the time they get to a reversal bar that actually pushes, they're like, God, to hell with it. I'm tired of this market. And you'll find yourself fighting momentum. You'll find yourself fighting triggers. You'll find yourself fighting everything that says down. Yeah, man, it is. Tater, one of the beautiful things about what we do is you don't have to be first. You don't have to call the top. You don't have to call the bottom. You didn't have to be in at this red line to be able to capitalize. You just had to be a little patient and wait. And patience comes through trust. Patience comes through pattern recognition and all that good stuff. And look at this, when the market breaks out, right? Support, resistance, support, resistance, support, resistance. And now we've got the potential for a breakout. Now we're starting to see that push down. Now we're starting to see that push down. So we don't have to get caught in the nonsense, and we don't have to hope for these little retracements when there's so much great stuff to happen. If you're just patient and you let the advantages come up and come together. So Gary E., did that help a little bit? Does that? Awesome. And guys, these are the questions that make this class amazing. I can't stress that enough. When you guys have something in your head and you're like, maybe that's not important, that's the question to ask, right? And it will. You can minimize losses, right? Because how many times have you guys gotten into a trade and put your stop all the way down here? Well, let me give it some breathing room. And you completely ditch the idea that your advantages are here, right? And you're so far beyond those advantages. And you're like, the hell happened? And then here comes Jose, that when it runs through, he's like, yeah, I lost 6 ticks on that one. Yeah, I lost 2 ticks on that one. And then the same thing with the reversal bar, Gary. So the next step is when it does start to go in the direction of your trade, a couple ticks below that reversal bar, you go from risking 10 to 12 to sometimes risking 2 to 3. Because at this point, the market said it's going up with the momentum, with the direction. Everything says go. And if it starts cranking back down, well, shit, I don't want to be in it. So we look at something. Let's see what this is doing. Smalls have returned. The path is clear. We're looking good. And my line's on the other side of the correction point. Does everybody see that? And this is a good one. It's on the other side. It's close. If I choose to take a short, I know that I've already gone beyond the correction point. So I might say something, well, it's not high probability because I'm a little bit outside. So I'll manage it pretty close. If that mid-band doesn't create a bounce, I probably don't want to be in it. So I'm not going to give myself $300 worth of risk. I'm not going to say, well, that resistance might hold it, right? Because who wants to put that much risk on a trade? I'll run it a little tight. Either this is a reversal bar, or I'm not going to get in this trade because I'm not in the area inside of favorable large triggers. I don't have the best momentum, right? And that's why. So you can say it's not perfect. Why risk a metric crap ton on it? Because if it goes up here, I don't want it. If it goes up here, I don't want it. If it goes up here, I don't want it. Why not just get out at the lowest point? I can always re-enter, right? I'd rather take a trade 3 times at 4 ticks a loss and the third one works out rather than take 3 15-point losers and get dejected and blow out for the day. Does that make sense, everybody? Wasn't a perfect trade, not the best momentum, not an area inside. So why the hell am I going to drop $200 worth of risk on it? And now I just don't know with the weakness. Is it going to bounce off a mid-band? Is it going to go to fibs? Is it going to go to this fib? Or because this isn't a good top, because it didn't make it to the next key area, are the buyers going to try and push up and get there again? And we see a huge fight right here. The reality is I just don't know, guys. I don't know if it's going to do way up here or way up here, or if it's just going to drop out of bed. I don't know. So I wait for the advantages to be present. I wait for the absolute best of the best because, man, my money's worth it. All right, Tata Bear, we got a picture. Coming from a term, odds favorable. You take the pullback to the areas right inside, right? Did you realize? Oh, you went long. Oh, good God. Hey, Cav, you too, man. Thank you. All right, Tata Bear, I'm going to share my favorite book with you real quick. And I'm not knocking your trade. You came off of a million levels of support that had already sold. You took a chance. It's going to lose more than it wins, but I'm glad that you won this one. This book was written by my brother. It's very tongue-in-cheek. How to commit financial suicide in one easy step. The first one is that you're trading against strong triggers. This is one of the biggest mistakes new users make. I know, right? Hoping that the blue line holds, hoping that the red line holds, and fighting all the momentum established by the people that move the market because you're hoping that a blue line holds, right? And that's kind of tough. The second one is trading in determination conditions. Seek help immediately. And it's tongue-in-cheek, right? It's just meant to be funny. But what happens is it's very much a safeguard for new users until you develop the pattern awareness of when it's okay to take a chance. And let me go back to Sophia's picture. When she has room, but notice that she's taking a chance here, and this is such a key part. She has 4 charts that are all red, 4 charts that are all with momentum, 4 charts that say the market is more likely to go down than up. So rather than trying to get long off of support, she's going with the flow. She's in the river, riding the log all the way to the waterfall, right? And she knows that support just held, but she has such an overwhelming push down that she'll take the chance to get back to retest that support. Does that make sense? Both of you took quick little trades right in the middle. One had an infinitely higher chance of success because it was going with everything rather than against everything. So I will become that nagging little voice in your head saying, don't fight triggers. Sophia, have a Merry Christmas. I hope you rest, relax, stay away from the markets. Go have a pina colada. I've been craving pina coladas. And you're in Florida, so it just makes sense. Yeah, I will, but it always comes from a place of love, Peter. And non-threatening, no need to call HR kind of love, but love all the same. All right, Alan, everybody was throwing props. Let's see what you did. Alan says, pivot, stop out, third divergence, small triggers up, bing, bang, boom. And it's just a momentum. It's taking advantage of the termination, fighting triggers, fighting everything, right? Fighting everything that says down, Alan. Fighting the fact that it's coming from a good top. Fighting that momentum and taking the little immediate because of a great termination. Guys, this is a chart read. Absolutely, Scott. How to show the trade on the chart? Alan's trading a plan that isn't a high probability trend trade. Alan's fighting everything here. Alan, I know what you're doing. Master classroom, Alan. All right, Scott. So when you get to your chart, right click. It's good to see you. How did you like the class? You were one that I had picked to do really well with it. Awesome. That's what I kind of figured you would feel that way. So Scott, to show the trade on the chart, you're going to right click and go to data series, and you're going to scroll down, and your last thing, whether it's 7 or 8, is going to be plot executions. And you can change it to text and marker. And what that'll do is it'll show you on the chart where you got in. Does that help? Is that the one that you were looking for? Awesome. And guys, that's what the class is for, whether it's high probability trend trades or just a question, right? Dano, you said it's not your trade. Odds favorable, momentum, but no pullback. So you didn't have rules for it, huh, Dano? That's all right. This is where we celebrate victories. This is where we say, Dano, great job. Not just jumping in. Great job not saying, man, the market owes me money because it's going down and I see it. And what you may find one day, Dano, and I'll show you on the chart. There's a momentum style trade, and there's rules for it on the Discord in the trade rules that say when you're coming from that termination and everything says down and the momentum is its absolute strongest on every chart, when you break a fib and pull back to it, especially if there's one-to-ones there, this actually becomes an awesome opportunity that you may add to it later. When you start seeing this trade happen a little more, letting it clear the area and taking that quick little stab back. And this is exactly, Tater Bear, what you were pointing out, right? Let it get beyond its support, and then let support act as a bounce point to go with all that freaking momentum. So that's just what you can look forward to, Dano. And as a brand new user or somebody that's not where they want to be yet, it takes a little bit. You're like, that doesn't even make sense. What the hell does that mean? And then like next month, you're like, oh, wait a minute. Mark talked about this. And then the next month, you're like, oh, I'm going to start catching this one. Speaking of guys that catch that one beautifully, this is Jose. It's a 50-50 without a lot of momentum. And they're just peeking through. And there's no areas inside. And Jose says, I'll take a signal. And off it goes. Nice job, Jose. Everything was up, coming from a termination, and Jose takes a calculated risk. Not one freaking rule met. Nice job, Jose. And then there you go, Dano. Check it out. All the momentum, bing, bang. Beautiful trade. And you know what, Jose? I was a little more conservative, just going for quick giddy-ups. But that sure looks familiar, doesn't it? It's kind of fun. You start reading charts. And guys, a chart read is a chart read. There's a right way and a wrong way. I took the exact same trade, Jose. Those are the easy ones, guys. Trying to predict the market's breaking. There's that damn white bar giving you trouble. There's that damn HVA, Jose. Terminations everywhere. Everywhere terminations. Going long rarely works out. Isn't that the second chapter of Financial Suicide? And then everything is easy. Everything says down, and you do it. And then we hit support. And you said, I'm not going to risk it. I'm not going to hold on for dear life. Easy money. Unsure where to enter because of divergence. Well, you had weak triggers. Jose, are you in here? You may have already left. No? Let me share this picture with you again, Jose. I really can't stress this enough. Both of your 50-50 trades, you got away with one. Weak triggers don't break stuff. Weak triggers don't smash through areas, right? Jose, let it be odds favorable. And then if it's not odds favorable on a 50-50, keep it tight to the area. And I think that's what you did well on this one. But you got weak triggers. You're just hoping that it breaks, right? Please let it break. But when it's this weak, I don't know, you're just taking a guess. You're taking a guess. It's either going to go from the low or the high. Hey, Tater Bear, welcome. It is great to have you, man. Have a Merry Christmas. Happy holidays, whatever works. All the triggers and all the charts were screaming down. You know I'm going to do it, right? You know I'm going to do it, Jose. The one chart that leads the way. The one chart that gives the best information. Smalls are working their way inside of the large. They've barely broken through support. I don't disagree with the short. Everything says down. So when this one wasn't perfect and everything was down, notice a couple things. Support's breaking, behaving as resistance, right at this line. All the triggers are below. You're hoping 25 breaks, but this is the one that, based on trigger location, should help you to the downside, right? And you don't have odds favorable momentum on the 5-1. The smalls are inside, and you have divergence. So you're absolutely right. It's a crapshoot. It's one or the other. I don't know which one. So you waited for confirmation. And then when you got the confirmation, you took the trade. That is perfect usage of the market flow chart, Jose. I don't know. It's not perfect. I'll wait for confirmation. Does that make sense? That's perfect market flow chart usage. Awesome. All right. Hey, Scott. Let's do a quick. That's your large chart, small chart separately, right? I want to make sure that I'm looking at it right. So are they next to each other? Cool. So one of the cool things about capture, is if you hover only one chart, it's going to give you one chart. If you go to the top left of your large chart and drag it all the way down, you can show me both charts side by side in one picture. And it's just easier for me. This is me being a sissy. It's just easier for me if I can look at both of them without having to toggle. I'm going to take yours and I'm going to build them together and snag it. But that creates an easier read. It'll be easier for you to study tomorrow as well. When you're looking at what the large chart and what the small chart are doing simultaneously, instead of trying to go back and forth and remember. Jeremy P. Termination, reversal, crisscross. I love it. How did you pick that? Or did it just miss you? Oh, cool. Thanks, Scott. I was going to take care of that. It just missed you? You knew right where, huh? Dag nabbit. But that's that common theme, right? Termination. I hear crisscross in my head now. You knew exactly where it should pull back to, and it just didn't get you. Awesome trade, though. Awesome setup. I like it. Yep, everything you look for. All right, let's check it out. Bad top. Straight to termination. So, Scott, you just opened the door for an awesome lesson, brother. Thank you for that. We're going to talk about the gap theory. And this is pretty cool, and I think that you nailed it. And I don't know if you know that you nailed it. Maybe you were paying attention another day. But if price pulls away from the synthetic triggers on your large chart, those large triggers on your large chart really, really fast and smacks into an area, it's likely to snap back and close the gap to that trigger. And we call this the gap theory. And here's a great example of it. Price comes all the way down into Fibonacci support, and the large triggers just don't follow. They're lazy. Remember that this is a correction, right? And when they don't follow, when there's room for a full bar, price is likely to go back and close that gap, to snap back and close that gap. And you'll see it if price hits a fib, if price hits a mid band, and the large triggers remain above the reversal bar marker on your large chart. And what you did, I think, is brilliant. So price comes down and hits support, and it closes the gap to the large triggers, and you didn't do anything yet. And then it hits support again, and it closes the gap to the large triggers. But the large triggers are trying to roll now, and the small triggers keep pushing down. And you just said, you know what? I'm going to hop in at that close in the gap because everything says down. And you took it right down to 14. And 14 was just above Fibonacci support. I love it. And then it pulls back and all your indicators are down and the momentum is there. It is a termination condition, but it's already shown you twice that it's not going to go up off of it, or it doesn't want to go up. The sellers aren't going to let them go up. So you said, hell, I'm going to go with momentum. And you take your first profit at the 1-to-1. Quick little snippet, right? And then everything breaks. And you forgot to wait for the pullback. But you had the momentum, the potential to break. And you get in a little low. And then there's your pullback, which is cool. I would have rather seen an entry up closer to those to the 1-to-1s, to the mid band inside of favorable large triggers. That's kind of rule number 3. But you let it break. You take the momentum. It gives you a little retracement. Doesn't scare you because the large chart says let's go. And it pushes all the way down. Awesome exit. There's a lot of lessons in this picture. There's a lot of great chart reads in this picture. And there's an awful lot of evidence to support that when there's a lot of advantages, it doesn't have to be a high probability trend trade. You know, the first one is gap theory. Letting it close before you look for an entry. And then when it does, capitalize. And if it doesn't change, capitalize. And if it doesn't change, capitalize. Great job, Scott. Your next step is going to be to annotate and tell me why you did what you did, because that's what I saw. And I don't know if you saw the same thing as I did. So annotate. Let me know. What do we see now? Great job, though, dude. Weaker triggers, right? Weaker triggers, divergence, second divergence, pushes it up. We'll see what happens. Man, Jeremy, you just low down, didn't get you. Did you find something over here? Because it didn't get you here, and they're like, oh, shoot, we forgot Jeremy. And they came back for you. I hope you got some of that. Because when terminations create full reversals, and the stuff is that strong, just know areas, right? That's a harder one to take. But notice that, and Gary, this is a good one for you, Gary E. Look what it did on the pullback. Not inside of favorable, not inside of favorable, not inside of favorable. And it came all the way back to the triggers. All we needed was a line there. All we needed was some sort of line that just said, man, that's the spot. Watch this. I don't even have to look at Jeremy's picture. I saw pre-trade, which means Jeremy, with odds favorable and everything up, he probably has an order somewhere right in this range right here. Let's see if I'm right. Holy smokes, there it is. Jeremy's about to trip over some pennies, though. I sure hope that mid-band isn't the spot. Man, that would be embarrassing for everybody, wouldn't it? If it bounced off the mid-band and not the fib. So once again, from the highest point to the lowest point, right? Guys, it's okay. Sacrifice a couple pennies. We'll see what happens. Whoa. The NASDAQ, look at that. There's your big bounce, right to the mid-band. There's a pivot stop out. Textbook pivot stop out. That's a termination that creates a full reversal. That full reversal gave a metric boatload of momentum. And that's not a very good look, is it? Right into those 1-to-1s. Creates some problems over there. Jose. You take a shot with it not being in the triggers, then it goes back to the triggers. And then you get out a couple of them right at the trouble spot. Absolutely brilliant. And you're holding. And Jose, once again, this is great usage or the potential for great usage on your market flow chart. And let me show you what I mean. Your entry is at 69, right? You're hoping that this fib and midband holds. And you know that it's not perfect. So you say, I know it's coming back and I've got this range. It may hit triggers. Let me wait for something on market flow. And if you waited for the confirmation bar, you actually get a better order with established risk. You get in a little bit lower, your risk is established, it's finished the pullback, it started in the direction, and at this point you're feeling good, right? Does that make sense, Jose? When this isn't perfect, that's when waiting for this one. This white bar is going to freaking kill you, dude. This white bar is going to kill you. You have to stop believing that the white bar means that your read is perfect. That's going to be your biggest challenge with market flow. You are so into these white bars that you skip a read in the middle. And I get it. It is because you get excited. And Jose, you have the burden of being an amazing chart reader already. So, and this is what happened for me, and maybe this is what's happening to you a little bit, is I know I'm great at reading charts. I know I'm so good at reading these charts that I start to anticipate a little bit. I start to, I know that, well, let me see if I can find one, right? Ooh, let's use this one on the S&P. So guys, do you remember when we talked about it just wasn't perfect, right? Jose, let's look at this one with a market flow chart on it. Well, if the entry spot isn't perfect, if it's not inside of favorable large triggers, if you took the white bar, it killed you, right? Run over. That sucks. But if you waited for it to have something a little more concrete, if you waited for it to give you something, and here it pulls back to your high volume area line, right? And all your triggers stay down, and all your triggers stay down, and all your triggers stay down. Well, now you're like, I don't really have a clear one on this chart, but this HVA line is a good opportunity. And sure enough, it's not even a market flow signal, but a reversal bar off of that HVA with everything staying down gives you this rock star opportunity to get back down to that outer band. This bar is a breakout bar. This bar was buyer heavy. That's why we got the green line, right? This bar was a breakout bar. It was seller heavy. That's why we got the pink line. So when we look at yours, and I'm just trying to turn it into a market flow lesson, this bar was seller heavy. It wasn't giving you a lot of opportunity there. But if you go back to, let me see if I can find a good example. So rules have to be met on the large chart. That's the biggest thing. I'm going to see if I can find a white bar opportunity. So this would be the one that I'm looking for to generate a signal, Jose. Maybe this will help. And I don't know if the rules were met. Not a reversal bar, not from an area, not anything significant, right? And I get a white bar after it. These are the white bars coming in where I start looking for that signal. If everything is true for a high probability trend trade, that's kind of what I'm looking for. Not a bar off of a key area, right? Not a bar that just told me, hey, this is a signal strong enough that I would look for it for a reversal. Too much. So this yellow bar comes from an extreme. It comes from beyond the outer bands. This yellow bar is the first up bar after all of these down bars, right? This is like, oh, shoot, the buyers are trying to take over. This breakout bar, especially with buyers everywhere, kind of confirms that we're exhausted a little bit. And then it pushes up, pushes up, pushes up. You never get the signal. And your area is not even till up here. So the white bar going in, it's kind of problematic. And it takes a while, and it takes study, and it takes some time to really kind of come to grips with it. But don't worry about the white bar initially, Jose. Worry about the confirmation bar first. Does that make sense? Don't worry about trying to guess the white bar. Worry more about, let me get to it real quick. Yeah, absolutely. I hope you can tell, I'm having a good time with you on this. Going through the market flow stuff, I'm really digging it. I'm having a good time working with you on this. This stuff's fun for me. And then for you guys that are going to work into market flow a little bit, make sure that the rules are true first. It makes it much easier, right? And then once the rules are true, if you need that little confirmation because it isn't perfect, look for the signals. Don't worry about the white bar. And it talks about the white bar, Jose, because it's necessary to create the signal, but it doesn't guarantee the signal, right? So there's a white bar, absolutely no signal. But this white bar into the rules-based trade, that's the one that gives you the signal. This white bar, yeah. And I still haven't been able to figure out how to tell which is which, to be honest with you. So waiting for the confirmation, waiting for the arrow, waiting for the antenna bar, waiting for the yellow reversal bar, it's going to keep you from jumping into these trades prematurely. And you'll begin to recognize a pattern when it's okay to start using it. Does that? And I think that may keep you a little more focused. I went from the mid band, Jeremy. Oh my gosh. All right, class is over. I'm done. And right at that moment, Mark felt just like his big brother, John. Nice job, man. Great entry. Look at that entry, guys. Oh, and I've got to do it. Hold on. Where's that pre-trade picture? That's the one that didn't get you. 76 was your number. It stopped at 79. Guys, this is a great lesson, and Jeremy knows this, and that's why he adjusted. Trust the method, guys. Build that trust in the method. Realize that with all of this momentum and everything screaming up, the top end, guys, get in. Be willing to ride out a little bit. It'll help a lot. 2 in at 81, 2 out at 01. That's the easiest $400 you're ever going to make, Jeremy. I don't know. I don't feel like $400 in 10 seconds of your life is a little early. There's always going to be that remorse. There's always going to be the, oh, I could have got more. I could have got more. I could have got more. God, Jeremy, can you imagine this one all advantage trade? If you did it twice a day and pulled off $800, there's your week. There's your month. And I can't do that math in my head fast enough, but that's somewhere around $190,000 a year, I think. It's just a matter of getting paid, and you got paid. Great job. And beautiful trade. I could teach a class based on this trade, couldn't I? Gary E., does that make sense? He waited for the area inside rather than the large trigger itself. So he reduced his risk, and he also increased his profit potential. Does that make sense, everybody? Scott, Mike, Andy? Hey, Miss Debbie, have a very Merry Christmas. Spoil those grandbabies. And we will see you just before New Year. Good stuff, guys. Let's go to the live market and look at it. What do we have? So, Jose, let's go back. Market flow, right? You have odds favorable momentum, but you do have a termination. If there was something in your gut that said, man, I really think this is my long, I want it to be my long, you never get confirmation, right? You never get one of those signals. So you never get suckered into it, into the termination. So good stuff. Jeremy, I love everything about your trade. And all that momentum, it just keeps going, right, guys? Just keeps going. Weak triggers into resistance. What do you guys think? Weak triggers into resistance. Who's got their I hope hats on? Fun stuff. Fun stuff. Man, I missed a break, didn't I? Darn it. That's okay. So no rules met in the market. Seems going doing. Weak triggers into resistance. I don't know. Everything I have still says up except for that red stripe, right? My smalls are up, my large are up, my large are up, my synthetic are up. Everything says up. Definitely not going short, right? Not yet. But Jose's absolutely right. And Jose, here is a good lesson for you. You know, I actually woke up thinking about this lesson for you today. And I'm going to use this chart for it because I know that you like to get in, right? And I know that you like to be first. Guys, if you come into key areas with this much momentum, if you come into areas with odds favorable momentum, there's a pretty good chance it's going to retest off of a mid-band. There's a pretty good chance it's going to retest off of fibs. And then look at the difference in the triggers on the second hit. Big difference, right? Everything is screaming. Then we get a retest, and now we're super, super weak going into them. So these one-to-ones don't scare me so much. Does that make sense, Jose? This was such a good lesson. My brother gave me this one. Because, guys, if you've ever watched me and watched me talk about stuff, you realize that for the brand new users, I stress a lot. Don't trade in the lines. Don't trade in the lines. Don't trade in the termination conditions. But there's a point through chart reading where you can begin to create expectations. I disagree, Jose. I disagree wholeheartedly. If you don't get in when everything says you have a better chance of winning, NASDAQ will eat your lunch. If you fight triggers, if you fight trends, if you fight areas, NASDAQ will destroy you. If everything is flowing on the NASDAQ, you know as well as I do, it continues to push in directions, right? Until the problem areas. The problem is that sometimes there's just not shit to do. And the reality is that because it moves so fast, we believe that the NASDAQ owes us more entries. We believe that the NASDAQ owes us more winners. That was my biggest problem, Jose, trading the NASDAQ in the beginning, is I was so inclined to believe that the NASDAQ owed me a win that I fought small triggers so much so that I dedicated a whole section of my spreadsheet to it. When small triggers just annihilate you, you can't fight it. But the flip side of that is if everything says go, if everything says that that it's the right time, if everything is up and everything is strong, I don't ever have to fight these. And then what happens is I find myself getting on the right side of things because I have that little bit of patience, and because the large chart said, here we go, I get to the correct side of that problem, and then it really becomes pretty easy. Rod, I hope you have a good one. Merry Christmas. Thank you for that. We'll see you next week. I'll be back on Tuesday or Wednesday. I don't know which one. I know my wife works Tuesday. I think I don't work until Wednesday. So enjoy it. I hope it's awesome for you. Does that make sense, Jose? But that one comment, the thing is with NASDAQ, if you don't get in early, you lose 90% of the trades. I think if you get in early, you lose 90% of the trades. If you get in with the advantages, it's so much easier to go. And sometimes that means a level of patience, just like you said. Just like you said. And then Dano, everything says up. Look at that rock star entry. Profits. And then Dan, because of the momentum, you said 75.09. You and me both, Jose. You, me, and 90% of this room. Hey, Dano, beautiful trade. Can I ask you, and it's none of my business, why do you still have almost $400 of risk on this trade into a Fibonacci resistance? Just curious. This pivot right here is an awesome spot to move that stop. No reason to give anything back, man. You're up so much money. Use those pivots, right? It already pulled back. It already went up. Use a pivot. Yeah, and crazy spikes happen for no reason. So you'd hate for a bunch of sellers at this red line to go, hey, let's go down. Bam! And then suddenly everything that you made here, you get back. Great looking trade though, dude. Great looking trade. I like it. We will resume classes on the 27th. There we go. That's my answer, huh? 600 for the day is a good day, Dan. Should we do the math? You too, Andy. What is that? 3K a week if you can pull that off every day. I like a $12,000 month. Great stuff, man. Guys, you're killing it. 2024 is going to be better, too. 2024, we're just going to take the best trades. Oh, the old PC reboot, huh? I've had to do that one. Great read, though, Joel. Awesome read. Perfect. Picture perfect. Well, it sounds like everybody's jumping ship, which is cool. I like it. Guys, when you get into New Year, and check it out, Jose, there's that lesson, and everybody, here's that lesson. Super strong into an area, looking for a retest, super weak on the retest. Look at how that worked, guys. This is when, yeah, Jose knows it. We're 50-50, right? But because of that great top, because of the weak triggers into it, because of that level of momentum, Jose's digging it. There's the momentum one. In with confirmation. So you paid a little for confirmation. So Jose, I want you to look at on the spreadsheet when you're done with this one. This will be a huge one for you trading the NASDAQ. Guys, for everybody trading the NASDAQ, this is a huge one for you. When you're coming from a termination, you have odds favorable. Everything is everything that you could ever hope for. Jose, those small triggers were more than a full bar away when you hit the area for continuation. That, for me, I'm in at the area because those small triggers up can behave as support, especially on a 50-50. It gives me time to manage. It gives me room to make some money. when the small triggers are a full bar away. In at the mid band, you have to make the choice on whether or not divergence is going to take you out. It just depends on what your plan is. But Jose, that's a pretty good one. I like the confirmation without a doubt, but when my small triggers are so far away, I play my little gap theory thing on that. And I say, man, with everything down, with all the momentum, with an area for bounce, with the small triggers so far away, it's probably at least going to go retest them. And that's exactly what happened, right? And then they can't break below, which lets me know, shit, it may bounce back up. And then third divergence on a 50-50. And they're struggling. They're struggling right at this key area that you guys knew about at 11:27 a.m. And here it is, 11:44. 27 minutes later, you knew exactly where the problems could happen. I think that's the wonderful part about what we do, guys, is there is no, oh shit, where'd that come from? It's been there for an hour. It's been there for 20 minutes. It's been there for 3 days. You knew that this fib was there. When did we know that fib was there? Let's see. That Fibonacci, that key number started printing on the 22nd of December around 8 in the morning. Dude, Andy, Dano Seasonings, don't get me started. I have everything that they make in my spice cabinet. Oh, see, Jose, you took it from the easier spot. See, okay, I like that. Great use of confirmation. Termination, it starts to roll. You've got an iffy spot, and you take the... Yes, Jose. Beautiful. No, it's okay. I'll sell Dano Seasonings on this site. I don't care what my brother says. Those things are amazing. Jose, beautiful, perfect, everything about it. Being able to take advantage a little bit earlier. But look at the difference. Everything rolls, all of it rolls, and you're like, let's go, baby. And then it comes down, you get paid, and yeah, you may have held that one just a little bit long. Without a doubt. Nice job, Jose. What's going to be funny is it's just going to click at some moment, and you're going to wake up, and you're like, oh my gosh. Up 3K on a 2-lot, Gary? That doesn't suck. John's class is amazing, guys. I'm not here to sell John's class, but I'll tell you right now, it's pretty freaking outstanding. Gary, it's just an 8-range chart. So you've got to choose a range bar. You've got to make it 8 range, and you just have to put the template into it. But market flow, all those special bars that are in there, you may need to talk to your salesman to get them. You can build a range chart all day long, but my brother's gone through a lot to create the market flow indicators and all that stuff, and I believe that it's another one. Yeah, I agree, Gary. John and I talked about creating a tutoring class for it. Look at that termination condition holding. Like a pre-class where you guys get stuck with me for 2 or 3 days to get everything that you need to be able to really excel in his class. We'll see, though. Guys, we're going to call it 10 minutes early. I'm going to go ahead into Christmas. I hope everybody has an amazing one. I hope that you get to spend it with people that you at least like a little bit. Eat lots. Take naps. If Christmas isn't your thing, I hope you have a great holiday, right? Whatever it is that you may be celebrating. I am excited to see you guys on the 27th. We're going to come back. We're going to keep doing it. We have a short week next week. In Dallas, rabbits reading, I believe it. I have rabbits in my backyard, Gary. I totally believe it. And then we're going to rock into 2024, guys. We're going to kill it. Everybody in this room gets funded on their prop firms. Everybody in this room has a solid plan. Everybody in this room eliminates the fear of missing out. We're going to go into 2024 guns blazing. But right now, go into the holiday, guys. It's what, 11:48 on the East Coast. Crack a beer, you Pacific Coasters. Have an awesome weekend. Have a great Christmas, and I'll see you guys next Wednesday. Take care, everybody. You guys be good. Merry Christmas.